Yep. Good morning. The committee will come to order. Today we will separately consider three measures to meet our reconciliation instructions in the House-passed budget, which asks committees such as this to find a smarter way to reduce our debt and deficits which are costing us jobs. The gentleman from California, Mr. Becerra, will remember that during the Bowles-Simpson Commission we heard nonpartisan testimony that debts as large as ours slow economic growth in this country by about 1%. And in America, that translates to about 1 million jobs. I think we can all agree the American worker, and more importantly, the unemployed American, can't afford these levels of debt and deficits. Congress has begun to tackle this problem, and while more work lies ahead, last year the Budget Control Act put in place spending caps that cut over $2 trillion from the budget over 10 years. Part of those savings, however, result from a sequester, which we knew then and we know now was meant as a motivating factor for Congress to find a smarter way to reduce spending than the sequester's arbitrary cuts, which even Defense Secretary Panetta has said would be like shooting ourselves in the foot. As such, the items before us today include several provisions that have previously received bipartisan support and will fulfill the Ways and Means Committee's reconciliation instructions by saving at least $1.2 billion in fiscal year 2013, $23 billion over the next 5 years, and $53 billion over the next 10 years. The first recommendation would require exchange subsidy overpayments in the Democrats' health care law to be repaid in full. In certain circumstances, under current law, recipients are permitted to keep taxpayer-funded health insurance exchange subsidies to which they were not entitled. The bill before us today protects taxpayers by requiring those receiving higher subsidies than allowed under law to return any overpayments. This policy will reduce the deficit by $43.9 billion over the next 10 years. A Democrat-controlled House and Democrat-controlled Senate first used this offset in 2010 to pay for a temporary Medicare doc fix. This Congress has also endorsed this policy as part of the 1099 repeal legislation that became law early last year. As Secretary Sebelius has previously said, requiring the return of exchange subsidy overpayments, quote, makes it fairer for recipients and all taxpayers, end quote. Second, we'll consider a recommendation to prevent abuse in the refundable portion of the child tax credit, officially called the Additional Child Tax Credit, or ACTC, by applying the same safeguards that apply to the Earned Income Tax Credit, EITC, to the ACTC. As we all know, the EITC already requires individuals to include their Social Security number on their tax return in order to claim the credit, and will require the same with regard to the ACTC. This provision is based on legislation previously introduced by Congressman Sam Johnson, which was included in the House-passed version of the payroll tax cut extension bill last December. In the Senate, Missouri Democrat Claire McCaskill has explicitly called on the IRS to end ACT payments to individuals without Social Security numbers. The legislation will help deter abuse and fraud that cost taxpayers billions of dollars by preventing those without Social Security numbers, including illegal immigrants who are currently ineligible to work in the United States, from receiving checks from the IRS in the form of the refundable child tax credit. This provision will save taxpayers $7.6 billion over the next 10 years. And finally, we'll consider legislation that repeals the duplicative social services block grant, which states use for 29 different social services, including quote-unquote other. Begun in 1956 as a way to match state spending on services to help families leave welfare, the Social Services Block Grant is now a 100% federal funding stream that can be used to provide almost any service to anyone, regardless of their income. The program requires no state contributions, includes no eligibility criteria, has no real accountability for results. States simply report what they plan to spend the money on, for whom, and what the recipient's age is. Meanwhile, there are literally dozens of larger and more accountable programs that provide the same sorts of services funded by the SSBG. Repealing the Social Services Block Grant will reduce duplication and save taxpayers nearly $1.4 billion in the next year alone. The House-passed budget reflects the tough choices necessary to get this country back on course. Republicans have made a commitment to reform Washington, to strengthen our economy, to create jobs, and get our fiscal house in order. Congress owes it to the American people to cut out-of-control Washington spending, balance the budget, and most importantly, help employers create jobs. I look forward to discussing the recommendations before us today and hopefully moving these spending cuts forward in a bipartisan manner. And before I yield to Ranking Member 11 for his opening statement, without objection, I ask that all members' written statements be included in the record. Mr. Levin.
I agree with you, Mr. Chairman. We need to watch the deficit. Tomorrow we're going to bring up a bill that would increase the deficit $46 billion. But that's not what is before us today. Last month, House Republicans passed a budget revealing their absolute priorities. Tax cuts for the very wealthy, paid for by seniors, middle-class families, and the poorest and the most vulnerable. Reflecting their claim and creed that support programs risk becoming, I quote, a hammock, the highest incomes are untouchable, while programs for the youngest to the oldest are shredded. The legislation we are considering today is the next step in their ideological march. Ending refundable child tax credits for more than 3 million children, in 2013 alone, in families with an average income of about $20,000. Attacking further the Affordable Care Act, so another 350,000 Americans would lose health care coverage, penalizing them for work and economic advancement, death, or divorce. Eliminating funding for the Social Services Block Grant that helps provide critical services to 23 million children, seniors, and disabled Americans. The block grant helps provide Meals on Wheels and other supportive services for 1.7 million seniors. 1.7 million seniors. Services for nearly 1 million disabled individuals. Nearly 1 million disabled individuals, including respite care and transportation. Child care and related assistance for 4.4 million children, and child protective services for 1.8 million at-risk children. What is happening today is a vivid demonstration of how rigid ideology has changed this key committee. When the block grant was in jeopardy during several years, the chairman and I and others, both Republicans and Democrats, acted together to protect the block grant's vital funding. Those efforts were embodied in oral and written communications during a number of years to leadership and other colleagues. This bill turns this committee's back on bipartisanship. I urge my Republican colleagues to rethink this bill. It is a disservice to this committee. Most vitally, it is a disservice to the American people.
The committee will now proceed to consideration of the committee print on budget reconciliation, legislative recommendations relating to recapture of federally subsidized health insurance overpayments, which was distributed in advance. Without objection, the committee print will be considered as read and open for amendment at any time. I will now turn to Tom Barthold, Chief of Staff to the Joint Committee on Taxation, to provide the technical description of this matter, and I'd ask that members hold their questions until after his presentation. Mr. Barthold.
Thank you, Chairman Camp and Mr. Levin. I'll give a very brief overview of present law on this point. For taxable years after 2013, the code provides a premium assistance credit for certain eligible individuals and families who purchase health insurance through the newly to be created insurance exchanges. This premium assistance credit is refundable and payable in advance, and the amount of the credit is based on an estimate of the taxpayer's income. The credit itself, though, is supposed to be reflected on the taxpayer's actual income tax for the income amount for the taxable year, so any overpayment that may arise is to be reflected on the taxpayer's income tax return for that taxable year. However, liability for overpayment under present law is limited to specific dollar amounts. The proposal before the committee would make the individual taxpayer liable for the full amount of any overpayment.
Thank you. Are there any questions for Mr. Barthold? Mr. Levin.
Mr. Barthold, could you tell us, relating to these three proposals, how many of them would have an impact in the year 2013?
Well, I'm not familiar with the block grant program, sir. In terms of 2013, the current proposal before you only relates to the premium assistance credits, and they only become relevant for taxable years beginning after 2013.
Would not the block grant proposal impact the year 2013?
Yeah, I don't know anything about the block grant proposal, so I think we'll have to wait for Mr. Weidinger. I'm sorry.
Could you tell us, have you analyzed what the likely impact would be on those who have insurance, the impact of this proposal?
The overall insurance market, yes, sir. We've done this work, as I've noted in the past, jointly with the Congressional Budget Office, and we've estimated that the proposal before the committee today would increase the number of people without health insurance on net by approximately 350,000, and that's an annual average. That's for any one year, in any 1 year over the budget period. That reflects changes both in employer coverage and in participation in the state exchanges.
Thank you.
Mr. Barthold, am I correct that this change would only require people to pay back portions of the health insurance subsidies that they were not eligible to receive?
Yes, Chairman Camp. As I noted, the law requires overpayment, and under present law, the amount of overpayment is capped, and this would just require full overpayment of an amount.
So nothing in this provision would require people to pay back the entire subsidy?
That's correct, sir.
So it would just be paying back the overpayment?
That's correct. It's making the subsidy amount precise under what is eligible under the law.
Does this legislation do anything to reduce the value of the health insurance subsidies for which people can qualify?
No, sir. As you just pointed out, it essentially zeroes in on the precise measure.
All right, thank you. Are there any further questions? Mr. McDermott.
Do you have any estimate of the number of families this will affect?
The work we did with the Congressional Budget Office, we did not relate to the number of families. The number that I cited to Mr. Levin was 350,000 individuals.
350,000 individuals?
Individuals, sir.
So you assume that that's probably 350,000 families?
No, it would be fewer families. Some of the individuals would be in one family. So a joint return, for example, would be 2 individuals.
And is this, how much money are we saving?
The estimated budgetary effect over the period 2013 through 2022 is $43.9 billion, Mr. McDermott.
So we're making a $43 billion cut in the Affordable Care Act without knowing who is going to be really affected here, huh? 350,000 individuals. We don't know if that's families. We don't know the circumstances under which they may have suddenly had an increase in pay or increase in income or not.
Well, sir, the question you raised points up 2 things, one of which I regrettably glossed over. Again, the premium assistance credit is an income-tested credit, and so it's the amount of credit, the amount of premium assistance is based upon the individual or family's income relative to federal poverty levels. So the premium assistance credit only applies to individuals below 400% of the federal poverty level. So we know that about the generally about the individuals affected.
So that if they got a $10 a week increase in pay and they popped up over the 400%, they'd have to pay it all back or a portion, or what's going to be the effect?
We should keep in mind, I think, the point that the chairman just raised is you don't pay back the full subsidy, you pay back the amount of the subsidy. Remember, the subsidy that is paid on an advanced refundable basis to the insurance provider is based on an estimate of your current year income. And the amount that is being discussed here about being paid back is saying if you had underestimated your income, which meant that the subsidy was somewhat overestimated, we're only talking about paying back the difference between the, let me call it the proper subsidy amount and the advance paid subsidy amount. So the proper subsidy amount is completely unaffected by the proposal, sir.
So it doesn't affect the way, I've bought a policy with this subsidy, and then my income goes up a little bit, and suddenly I lose the subsidy. I have to pay it to the government. Does it affect what's going on with the insurance company?
Administratively, I believe we recruit. Yeah, believe it does not affect the amount of payment to the insurance company.
So the insurance company still gets their money, but I just have to pay back to the federal government what I got in a subsidy. That's what happens here.
Yeah, well, I still have a question which I should double check, because it can also be the case, sir, that the insurance company is underpaid in some cases. And in those cases, the insurance company is supposed to be made whole. So I believe administratively, netting would occur. So that's the point. I'll have to get back to you on that. I'll clarify that later, sir.
The fact that you're talking about it in this way, and it's all, you have to consult with your staff, does it strike you that you're making it more administratively complex by doing this, doing a year-end clawback on everybody?
Well, Mr. McDermott, the overpayment recalculation is part of present law. So there's no change in basic administrative complexity with respect to measuring whether an overpayment is due. The only aspect in which you might say that it's expanded is that it will be the case that there will be some additional individuals subject to making overpayment. But even those individuals must do the calculation to determine whether they're subject to the current limit or not.
Thank you, Mr. Chairman.
Just a point of clarification along the lines that Mr. McDermott was asking. A lot of this discussion has been about people who make more than were expected, but what if an individual makes less in a year than he or she predicted, and as a result qualifies for additional insurance subsidies? What percentage of the underpayment under current law is the government required to pay this individual?
Yeah, thank you, Mr. Camp. I mean, that's a point that I just briefly touched on with Mr. McDermott. I mean, in the case that you described, the government would provide full amount of any additional subsidy required to the insurance provider.
So the government, on the one hand, will
recoup
pay the full amount, so
and
it only seems fair if the government and the taxpayers are going to be plussing up people whose income is less than expected. It seems that the taxpayer should also be protected in cases when someone earns more than they thought. But are there any further questions?
Mr. Chairman?
Mr. Herger.
Thank you, Mr. Chairman. I'd like to just follow up with with our current questioning, that really what we're proposing is nothing more than what current law is, as I hear you responding, Mr. Barthold. And I think it's important for us to understand how the tax code deals with other situations where a taxpayer's income changes. Yesterday, we had a hearing on tax incentives for retirement savings. For a single person who is covered by a retirement plan at work, contributions to an IRA are not deductible if the taxpayer income is above $66,000. Let's take the case of a single taxpayer who has both a workplace retirement plan and an IRA and who is making $55,000 per year. Mid-year, the taxpayer receives a promotion. As a result, his total income for that year increases to $68,000.
Yeah, I'll do that.
Does the taxpayer still get to keep any of the tax deductions, benefits he was expecting to receive for making IRA contributions?
No, Mr. Herger, as you point out, we measure income and we measure eligibility for those provisions that you noted on a tax year basis. And so since the taxpayer's income exceeded the threshold for that year, the taxpayer would be ineligible for a deductible IRA.
So then if he was receiving it during the year, halfway through the year he went above it, he would have to pay that back, is that correct?
But he would not be eligible to claim the deduction.
He
from
wouldn't
the
be
IRA.
able to eligible, correct. What about income tax withholding? Suppose a taxpayer receives a salary increase effective July 1st for January through June. Income tax was withheld based on her initial lower salary. Because of the raise, the taxpayer owes $10,000 in taxes for the year, but only $8,000 was withheld from her paycheck. Does the taxpayer get to keep any of that $2,000 difference, or does she have to pay all of it to the IRS?
Well, no, again, sir, our income measurement is on an annual basis, so the full year income determines the tax liability. So a raise would lead to an increased tax liability, all of which would be due to the IRS. Similarly, a bonus at the end of the year increases a taxpayer's tax liability, and it is payable to the tax due as part of your tax liability.
Is it accurate to say that as a general rule, if there is a difference between what a taxpayer previously expected to receive as income and their actual income, tax liability and tax benefits must ultimately reflect the level of income the taxpayer actually received?
As a most general matter, the individual income tax, as I've noted, is we try to measure income and whatever deductions or exclusions might be permitted on an annual basis. And so if your expectation is different than what actually occurs during the year, it's what actually occurs which governs.
So our legislation then is very consistent with what has already been the practice for many years.
Was that a question? I thought.
Yeah, well,
Well,
anyway.
that was the conclusion. I'm sorry.
It would seem that our legislation then is very consistent with what we're already doing.
I see your conclusion, Mr.
Yeah,
Berger.
thank you.
Thank you. Mr. Neal's recognized.
Thank you very much, Mr. Chairman. Mr. Barthold, the provision in front of us today, I believe, raises $44 billion. And if I'm not mistaken, I believe that the so-called Buffett rule is introduced by Tammy Baldwin, otherwise known as H.R. 3903, would raise $46 billion. Is that correct?
46 or 47 billion, but yes.
Okay. So the Buffett tax would impact an entirely different population than the amendment before the committee today. The Republican amendment here impacts middle and lower income families who are under 400% of the poverty level, potentially making them liable for significant new tax liabilities or exposure. The Buffett tax, I understand, is aimed exclusively at people who are earning more than $1 million a year. Is that accurate, Mr. Barthold?
The so-called Buffett legislation begins to phase in at an adjusted gross income of $1 million and is fully phased in at an adjusted gross income of $2 million. And as previously noted, the recapture of the premium assistance credit is based on eligible individuals who are defined by 400% or less of federal poverty level.
This is why get-togethers like this are important, if for no other reason than to clarify and to draw some contrast between opposing views. And the choice that's being made here today is that we could enforce a policy that causes 350,000 people to remain or become uninsured and inflict the surprise tax liability on families who can't afford the extra cost, and still not ask millionaires who have done so well with the Bush tax cuts over the course of the last 12 years. And I think today that asking that they pay their fair share of taxes is not too much. And I think that the difference in this hearing this morning is very, very clear between what both sides are offering. And I hope during the rest of this markup we'll have a chance to outline what the Buffett rule would offer, asking the wealthiest Americans to contribute their share after again having had an extraordinary 12 years, and targeting people at the bottom, in some cases those who make under $21,000 a year. Thank you, Mr. Chairman.
Thank you. Any further questions? Mr. Becerra.
Thank you, Mr. Chairman. Mr. Bartow, thank you very much for being here. When we're talking about 400% of poverty, what are the income limits we're talking about, say, for a family of four?
Approximately $90,000.
So we're talking about families that have income anywhere from $90,000 and below.
That's correct, sir.
And for a single individual, what would that be?
1/4 of that, so approximately $22,500.
And if it's 400% of poverty?
The 400% of poverty.
Yeah, okay. So we're talking about folks who are, especially if you're talking about a family, nothing more than $90,000. We're not talking about millionaires. We're not talking about folks who make $500,000. We're not talking about folks who make over $100,000. We're talking only about families that have income somewhere between $90,000 and below. Correct?
That's correct, sir. The credit is based on federal poverty level below 400%.
And this will affect individuals and families differently depending on their circumstance. Some families have very stable income. Others have income that fluctuates based on their employment or their status, life status, and so forth. So we can't categorize and say everyone fits this particular paradigm of a family of four or an individual.
Yeah, as as I noted, the premium assistance credit, when it's paid in its advance refundable form to the insurance company, is based on an estimate of your income for the year. And the points that you just made is that sometimes that estimate will not be very good because of changed family circumstances. So that's correct, sir.
Mr. Chairman, I'd like to enter into the record 3 letters that are opposed to this proposal. One is from Families USA. One is from Healthcare for America Now. And one is from the National Women's Law Center. I'd like to enter these into the record.
Without objection.
And I'd like to just mention some of the things that these organizations that represent millions of Americans point out. The letter from the National Women's Law Center points out that eliminating this provision, which is called the safe harbor provision, will especially hurt women. Women have lower average incomes than men and are more likely to work in part-time employment or for small employers who do not offer health insurance. This suggests that women will be more likely to be eligible for the premium tax credits that are proposed to be affected here to cause these individuals to pay higher taxes. A 2008 study by the Congressional Budget Office found that women experience more large changes in earnings from year to year than men. This suggests that women are more likely to have a difference in estimate and actual income during the year, and therefore more likely to have to repay a portion of the tax credit during reconciliation. Eliminating the safe harbor by removing the repayment cap will leave women who enrolled in coverage but had an income change mid-year, perhaps because of a new job or change in hours, vulnerable to an unaffordable tax bill. As a result, hundreds of thousands of women will refuse coverage for fear of the repayment penalty. Mr. Bartold, what is the, Mr. Bartold? What is, Mr. Bartold, what is the estimate of the number of individuals who will lose their health insurance coverage as a result of this measure?
Yeah, I'm sorry to be distracted, Mr. Becerra. As I noted earlier, the estimate of my colleagues and the Congressional Budget Office is that the net change in the number of uninsured individuals would be an increase of approximately 350,000.
So some 350,000 more Americans will go without health insurance as a result of this provision.
Relative to present law, that's the estimate. If I could also just take a moment.
Let me move on to something else for just a second.
If the chairman would grant me 10 seconds, I misstated a statistic to you in answer.
Go right ahead. Correct.
Answer to
Why don't we
your question.
clarify that, and I'll give you 10 more seconds.
I had said that the 400% of the poverty level for a single individual is about 22,500. It's in fact about 44,000.
Yeah,
I'm sorry.
I think you were talking originally about what an individual
For a
at the
family
lowest level, right? 100%. That's right. Thank you for that clarification. Actually, Mr. Chairman, I see that my time is about to expire. These letters are in the record. I think they point out the devastating impact this could have on middle-class families who are on the verge of getting decent health insurance for the first time and now are going to be yanked away from that opportunity. So with that, I will yield back the balance of my time.
All right, thank you. Mr. Barthold, just to clarify a point, this legislation doesn't restrict eligibility in any way, shape, or form, does it?
No, sir. The premium assistance credit remains as under present law. The amount of the credit is based on income for the taxpayer's taxable year.
So no one will be forced off health insurance as a result of this legislation?
No one's automatically denied the credit. The credit's still in place, and so there remains the individual choice of how to participate.
All right, thank you. Any further questions? Dr. Price.
Thank you, Mr. Chairman. I find this line of questioning or information from our colleagues on the other side fairly curious. Mr. Barthold, what's the title of this committee print, the issue that we're looking at today, the first issue?
Recommendations related to federally subsidized health insurance overpayments. Budget reconciliation, legislative recommendations related to federally subsidized.
And the section that we're looking at, the section title, do you have that in front of you? The committee print?
Oh, well, the amendment relates to Code Section 36 Cap B. The committee print actually has a blank on the section.
Before me, I have the title being Recapture of Overpayments Resulting from Certain Federally Subsidized Health Insurance.
Yes.
Would you explain to me what recapture means?
Well, as I noted in the walkthrough, sir, there's an advance payment of this premium assistance credit paid to an insurance provider. The estimate of that advance payment, is made upon an estimate of the taxpayer's income for the upcoming tax year. What is at issue is what's been referred to, colloquially as a true-up. When the taxpayer's actual income is known for the year, how does that compare to the estimate? If the income exceeds the estimated income, it implies that the subsidy was too big relative to the true income, and so the excess of the subsidy over the true amount is to be overpaid. Under present law, there's limits on the overpayment.
And that amount of money would then be, the citizen would be required to pay back that amount of money.
The excess amount, yes, sir.
And they're paying back, the title is overpayment. So they received more than the law stipulates they should receive based upon the formula.
Based upon the original estimate of the income, yes, sir.
And further, overpayment resulting from certain federally subsidized health insurance. What does federally subsidized mean?
Well, that's the premium assistance credit that's provided under Code Section 36 Cap B to qualifying individuals who will be eligible to purchase insurance in the newly created insurance exchanges.
And that federally those monies come from where?
The Treasury would be making advance payments to insurance providers.
So taxpayer
From the-
money
from the
or,
Treasury.
or,
From the
or,
Treasury.
or borrowed money.
Yes, sir.
Our friends on the other side want to call this a tax. Would you care to give an opinion as to whether or not what the difference is between a tax and a recapture of an overpayment?
Well, actually, the short answer is no. I'd not care to.
Would you?
To characterize that.
What is a tax?
I mean, you know, there's a lot of debate, and the parliamentarians also debate what a tax is, sir. And I'm not trying to be evasive. I mean, the recapture that we're discussing, or the overpayment that we're discussing, is collected through the Internal Revenue Code.
Let me ask. Let me see if I can clarify it. Under this, if this were to pass, under this provision, nobody would be required to pay any of their income to the federal government greater than what they were otherwise obligated to do. Is that correct? Under current law.
It does not change underlying income tax rates or calculation of taxable income. It's as you have noted, it's related to the amount of the advance refundable payment made to the insurance provider.
So a citizen gets more money than the law provides, and it's their what we're saying is it's their responsibility to return that money to the federal government. Thank you, Mr. Chairman.
Thank you. Any further questions? Mr. Thompson.
Thank you, Mr. Chairman. I just want to hit on a couple of points. I think the previous questioner was correct. You know, we don't want to do overpayments for anything, and we should be much more prudent as to how we spend our money. But I think there's a better way to deal with these things, and you can call it whatever you want to call it, but the fact is that this recapture is collected through the 1040, and therefore I would suggest that it is in fact a tax. But to go about it this way, it seems to me that we're really punishing people who are trying to become successful. If someone gets a Christmas bonus or a new job, that's not what they were. That's not how the issue started, and so they do hit a little bit of success, and we come in and knock the legs right out from under them. And as the witness explained, the intended or unintended consequence of this is going to be that 350,000 people will lose their health care coverage. This means it exposes families to bankruptcy, health problems, and it just seems to me that today is just another way, another attempt at trying to pick apart the Accountable Care Act, and I think that is wrong. And I also want to point out that it was discussed how much money this would collect vis-a-vis the Buffett rule. And I think it's important to note that just a week ago, you know, we had Mitt Romney poking fun at the Buffett rule, saying it would only pay for 11 hours of running the government. Well, congratulations. If my math is correct, this would only pay for 16 hours of running the government. I yield back.
Any further questions? There being no further questions, are there any amendments?
Mr. Chairman?
Mr. Stark, do you have an amendment?
I do, sir.
If the gentleman would suspend while the amendment's being distributed.
Mr. Chairman, I would reserve a point of order.
Point of order is reserved.
Pardon? I thought we agreed no amendments. I thought we agreed no amendments. I'll withdraw. What's your opponent's name?
All right, the gentleman from California is recognized for 5 minutes.
Thank you, Mr. Chairman. My amendment is simple. We passed the Affordable Care Act to provide health care options to all Americans, and this provision by my Republican colleagues continues their assault on affordable health care, and it caused, we think, about 350,000 more Americans to lose access to quality. We included caps on the amounts of money that lower and middle income families would have to pay back for good reason. If you force full repayment, it kicks these families just as their lot in life is improving, whether a new job or a pay raise, and it ignores the fact that they were struggling to cover premium costs just before this increase. The caps also are there to ensure that people get their families insured. And deleting these protections means that people are likely to remain uninsured for fear of being hit with a big tax bill at tax time. These aren't people living high on the hog. They're families who had incomes in their previous tax year that made them eligible for a specified level of tax credits. Maybe their income was low because a parent chose to stay home to raise a kid, or now if that parent rejoins the workforce mid-year, they could be slapped with a tax liability they didn't expect. Maybe an unemployed spouse finally got a job. Again, they're hit. Your provision raises $44 billion. Now, you could raise $46 billion by enacting the Buffett tax bill, and that wouldn't hurt families who are struggling to make ends meet and obtain affordable health care at the same time. It would only hit millionaires with a fair tax rate already paid by most middle-income taxpayers. So you guys made the decision to stick the costs of this reconciliation package to people with low and middle incomes, frail elderly seniors trying to stay in their homes, people with disabilities, foster children. My amendment simply states that this provision should not go into effect in any year in which the Secretary of the Treasury estimates that its application would cause a decrease in the number of insured individuals. If you oppose my amendment, you endorse the belief that 350,000 people should lose access to quality, affordable health care. So in the interests of these 350,000 people, I urge my colleagues to add this amendment to the committee bill. Yield back.
I would just say to the gentleman that I will urge a no vote on the amendment for a couple of reasons. And I'll go back to the comments that I mentioned in my opening statement about Secretary Sebelius in 2010, December, when she was referring to that time the doc fix and the Medicare extenders, that if we offset those costs by subsidy recapture, that would change the way, obviously, the overpayments of health insurance premium tax credits are paid back, and making it fairer for recipients and for taxpayers. So the other point I would make is that if this amendment passes, this would basically say that the savings resulting from repaying the exchange subsidy overpayments would be reduced to zero. There would be no savings. And as a result, our committee would not meet its reconciliation target, and the Budget Committee would be left to find the savings in our jurisdiction. And while I have great respect for the Budget Committee and its chairman,
who's leaving the room at this point, I might add.
Probably a wise move. In order to protect the jurisdiction of the Ways and Means Committee, I do recommend a no vote on this amendment. Are there any further comments? Mr. Levin.
Well, let me just comment on that, because I suppose you'll use that argument with the other two as well. So
We'll see.
so essentially what's being said here, whatever the merits are, let's exercise our jurisdiction. So let's exercise our jurisdiction inappropriately. I don't buy that. Mr. Bartow, let me just ask you quickly. What's the basis for the estimate that 350,000 people would no longer be covered? I mean, explain this, because you're serious people. We have 55 million uninsured in this country. I would think we would be careful about not adding to the ranks of the uninsured. The purpose of the Affordable Care Act, and I pick up Mr. Thompson's point here, is to try to spread the number of insured in this country. I take it you didn't pick this 350,000 out of the air. So tell us, what's the basis for it?
Well, Mr. Levin, there's several moving parts. Now, first of all, fundamentally, purchase of insurance under present law remains an individual decision, and so we expect that individuals will weigh cost and benefits. I had noted that the 350,000 figure estimate was reflected changes both in employer-provided coverage and individual purchases through the exchange. The joint modeling effort that my colleagues and the Congressional Budget Office have undertaken is that one factor is that some employers, they expect under present law, can make the judgment on behalf of their employees that with premium assistance credits that it might be more beneficial for, or equally beneficial or less costly for those individuals to purchase insurance through the exchanges. So they drop employer-provided coverage. Absent, and part of the beneficial aspect of that is that a number of them, may get overpayments and not have to repay it, so that the sort of the true cost of the insurance could be cheaper. Under this provision, that true cost being cheaper is eliminated, and so that can make it more that can reverse that decision, and you actually see some gains in employer coverage. For other individuals, they make the decision as is permitted under present law to weigh the costs of insurance versus the cost of the penalties that may be imposed for not having individual insurance, and to the extent that they're either afraid that they'll have to make an overpayment and don't want to bear that risk, or if they were seeing that yes, I can get insurance a little bit cheaper, possibly. Because of the limitation on the overpayment, they may then choose to go uninsured and pay whatever penalty there might be for being uninsured. So it's fundamentally an economic decision. The amount of overpayment changes the relative costs and benefits in the minds of individuals, and that's the basis of the estimate. Thank you.
And there may be concern that there could be a change in circumstances, perhaps unforeseeable, right?
Well, the changed circumstances. Remember, the circumstances go both ways. So your income can go up, your income can go down. So this is only about saying. I mean, if someone were really coldly calculating, they could say, I'm expecting my income to go up, but since the amount of but I otherwise qualify for the subsidy. The amount of subsidy is based on an expectation of my income for the year, which I believe to be an underestimate. That makes the insurance look really cheap. This provision would say, no, it's not going to be really cheap because ultimately you'll have to pay it back. It's not quite. I'm not quite clear on what to make of just saying that there are changed circumstances. That does add to the uncertainty of every individual's calculation. But remember, changed circumstances are both positive and negative.
Thank you for those illuminating remarks. Dr. Price is recognized for 5 minutes.
Oh.
Thank you, Mr. Chair. Mr. Well, I would just make the comment that this doesn't preclude anybody from purchasing insurance. The underlying bill that was passed by our friends on the other side and signed into law by the president stipulated that there would be an assistance, a premium subsidy for those individuals who were below a certain level of income. This provision simply trues up the amount of money that those individuals below 400% of the poverty level receive. Anybody may go out and purchase insurance that best suits them, who are below or above that. It's simply that this provides for the law fulfilling what the other side wanted initially, as opposed to doing more or less. So I think again that trying to say that that this affects the underlying intent of the original law, if you supported, which I understand that you did by your votes, the underlying law, this is simply making it so that the underlying law provides for what it was to provide for. So I would join the chair in opposing this amendment.
All right. Mr. Becerra is recognized.
Thank you, Mr. Chairman. I think what Mr. Barthold has actually made very clear that this is a complicated issue, and it's not easily defined or explained, because what goes into the calculation of purchasing insurance, what type of insurance, is a tough decision, especially if you're on the edge. If you're making your mortgage payment or your rental payment, you're trying to figure out how to make your budget work. It's tough. And for that person on the cusp of getting a little bit of assistance through the tax credit or not, this could make the difference between purchasing that insurance for your family, your children, and yourself, or not. And the estimate, and I think Mr. Barthold makes it very clear, it's an estimate. He can't guarantee that it'll be 350,000 people who will no longer have access to this insurance, or if it'll be less or more. But that's the estimate that we're given by the Joint Tax Committee. And so whether we call this a true-up or not, the truth is that 350,000 Americans will end up with no health insurance at the end of the day if this provision were to take effect. And what should be the most curious aspect of this is not that whether we call this a tax or not. And by the way, if it's in the tax code, if it affects the tax credit, if the money is collected by the IRS, I think most people would say that this provision is quacking quite a bit like a tax increase. And I certainly would say that anyone who tries to characterize this as other than a tax increase will secondly have to explain what happens when the Bush tax breaks expire and the rates are restored to their previous rate. And some people would like to characterize the expiration of the Bush tax breaks as a tax increase zone. So if folks are finding themselves having to pay to the IRS through the tax code, and as a result of a loss of a tax credit, extra money, that sounds to me a lot like the definition of a tax increase. And I think what's true here is the simple fact that a lot of middle-class Americans would end up losing the opportunity to have health insurance coverage, which is the reason why we should oppose this measure and support this amendment. And with that, I would yield back.
All right. Gentleman yields back. Mr. Brady is recognized.
First, Mr. Chairman, I want to withdraw my point of order, but make a comment on this overall provision. You know, if the bank overcharges you and you ask for a refund, do you want just part of the refund back, or do you deserve all of it? If the American taxpayer overpays a subsidy to someone for health insurance, do they want part of the overpayment back or all of it? This bill simply says all of it, as taxpayers deserve. And while I didn't vote for the President's health care law, my guess is that those champions of it believe that 100% of those eligible for help should get it. But in fact, some are not eligible and got too much. So 102%, frankly, are eligible, are getting help rather than 100%. So my thought is that this simply restores probably the intent to cover those who are eligible. and it protects the taxpayers to a significant degree to ensure that they get the full refund back from the dollars when the government overpays for those who are no longer eligible at that income level. We talk often about anti-fraud issues, waste, fraud, and abuse. The government ought to be better stewards of our tax dollars. Here's a perfect example that has bipartisan support, in fact, has been passed in some cases by unanimous consent in the Senate to do exactly this. Let's get serious about tackling fraud issues in Congress, saving taxpayer dollars, and tackling this deficit. I yield back.
All right. Mr. Teaberry is recognized.
Mr. Chairman, I'd like to ask unanimous consent to enter into the record a letter from Americans for Tax Reform that states, among other things, that this is assuredly not a tax increase.
Without objection. Mr. Davis.
Thank you, Mr. Chairman. I think that one thing I'd like to clarify is the Affordable Care Act, which was moved through this committee and other committees, and ultimately on the Health or on the floor of the House by the former majority, had provisions that many of us acknowledge on both sides of the aisle were incomplete at best and greatly increased complexity and the opportunities for error in processes. And what we're simply doing today is correcting one of those. The standards were clearly set by the Democratic majority in the last Congress. And what we're doing is helping to tighten up a process, as Mr. Brady said, to pass something that's been recognized also in the Senate by unanimous consent. And it's no different than if we receive an overpayment from our bank, that the bank is going to get that back. It's the appropriate thing to do, and what we're doing is being fair and also just at the same time, and I yield back.
Mr. Stark is recognized to close on his amendment.
Thank you, Mr. Chairman. And just a point of information, it's been rumored that this patch was a result of the chairman hitting me in the face, and that's really not true. I just want to make the point that all of you should wear sunscreen. And if that explains why I'm carrying this patch, it will help all of us, and it's just a point for everybody to remember. Mr. Chairman, I just want to suggest again that this amendment would reduce the number of insured, and the 350,000 people or thereabouts would lose insurance, and it I guess raises 45 million, and if we use the Buffett tax, which would only apply to millionaires, we'd raise a little bit more and not affect a very small number of people for whom this would impose no hardship. So I urge my colleagues to think of the voting for the amendment to provide insurance for 350,000 people and to allow us to pay for it through a tax on millionaires rather than on a tax on middle income. I thank the chair.
Thank you. The question is on agreeing to the amendment offered by the gentleman from California. All those in favor signify by saying aye. Aye. Those opposed, no. No. In the opinion of the chair, the noes have it.
Roll call, Mr. Chair.
I don't see a sufficient number of hands.
Oh, shoot. Sorry.
The clerk will call the roll.
Mr. Herger?
No.
Mr. Herger, no. Mr. Johnson? Mr. Johnson, no. Mr. Brady?
No.
Mr. Brady, no. Mr. Ryan? No. Mr. Ryan, no. Mr. Nunez? Mr. Nunez, no. Mr. Teaberry? Mr. Teaberry, no. Mr. Davis? Mr. Davis, no. Mr. Reichert? Mr. Reichert, no. Mr. Bustani? Mr. Bustani, no. Mr. Roscom? Mr. Roscom, no. Mr. Gerlach?
No.
Mr. Gerlach, no. Mr. Price? Mr. Price, no. Mr. Buchanan? Mr. Buchanan, no. Mr. Smith? Mr. Smith, no. Mr. Schock? No. Mr. Schock, no. Ms. Jenkins? Ms. Jenkins, no. Mr. Paulson? Mr. Paulson, no. Mr. Marchant? Mr. Marchant, no. Mr. Berg? Mr. Berg, no. Ms. Black? Ms. Black, no. Mr. Reed? No. Mr. Reed, no. Mr. Levin? Mr. Levin, aye. Mr. Rangel? Mr. Stark? Mr. Stark, aye. Mr. McDermott? Mr. Lewis? Mr. Lewis, aye. Mr. Neal? Mr. Neal, aye. Mr. Becerra? Mr. Becerra, aye. Mr. Doggett? Mr. Doggett, aye. Mr. Thompson? Mr. Thompson, aye. Mr. Larson? Mr. Larson, aye. Mr. Blumenauer? Mr. Blumenauer, aye. Mr. Kind? Mr. Kind, aye. Mr. Pascrell? Mr. Pascrell, aye. Ms. Berkeley? Ms. Berkeley, aye. Mr. Crowley? Mr. Crowley, aye. Mr. Rangel? Mr. McDermott? Chairman Camp? Chairman Camp, no. Mr. McDermott is not reported. Mr. McDermott, aye.
The clerk will report the vote.
14 yeas, 22 nays.
There being 14 ayes and 22 noes, the amendment is not agreed to. Are there any additional amendments? Mr. Crowley. The gentleman will suspend while the amendment is distributed.
I reserve point.
Mr. Chairman?
The point of order is reserved. The gentleman from New York is recognized for 5 minutes.
Thank you, Mr. Chairman. It's deja vu all over again. The underlying bill here is not a way to protect taxpayers or address fraud, and I think that some of the discussion in the previous amendment applies here as well. No, this chew-up bill that my colleagues on the other side of the aisle have served up today is a massive tax increase on middle-class families, regardless as to what Mr. Grover Norquist says, that penalizes work. The last time this game was played, middle-class families were directly punished by having their income taxes raised, even if they received a small end-of-year bonus. I asked everyone on this committee during our consideration of that bill, as well as during floor debate on the measure, to explain how their initiative was not a tax increase. And I was met with silence each and every time. Yet here we go again. But this bill is even worse. It will deliver a larger tax increase on middle class, totaling $44 billion, all aimed squarely at people who earned 400% of the federal poverty level, which is about $90,000 a year for a family of 4. So not targeted at millionaires or billionaires, but targeted at families of 4 who earn under $90,000 a year. So here we go again. The amendment I would offer would simply prohibit the implementation of this bill if it would result in a tax increase for any American. Essentially, let's see if the other side is as serious in opposing tax increases on middle-class families earning up to $90,000 a year as they are on millionaires and billionaires. The fact is, the underlying bill is a massive tax increase, And no one in this room can say with a straight face that it will not result in the increase in taxes for people. It is a $44 billion tax increase. And even more, this underlying bill penalizes middle-class families for success, a promotion, a new job, going off unemployment, a end-of-year bonus. In some cases, provides another kick to people when they are down by raising their taxes because of the reduction in family size due to a divorce or an unfortunate death of a spouse or a child. Now, let's get real. This bill is not going to become law, but that is what makes what we're doing today even more appalling. This bill demonstrates that my colleagues on the other side think what they think about working middle-class people. They oppose tax increases on millionaires and billionaires. They oppose reducing the subsidies that are given to big oil. But they won't hesitate to raise $44 billion in new taxes on the backs of middle-class families earning under $90,000 a year. Tomorrow there will be a bill on the floor that will provide U.S. companies with a huge tax break. Sounds okay on its face, but it would give tax breaks to U.S. companies even if they export jobs overseas. I offered an amendment to fix that bill here in this committee to ensure U.S. companies who offshore American jobs could not and would not benefit from this tax cut. But my amendment was soundly and unanimously rejected by every Republican on this committee. I'm hoping today for more consensus, that a consensus will prevail, and all members of this committee will realize now is not the time to be increasing taxes on middle-class families. But how can anyone say with a straight face that the wealthiest 1% should not have their taxes increased, but those earning under $90,000 a year should? Before I yield back, let me explain how this underlying bill would raise taxes on hardworking people and punish work. If you are unemployed or underemployed for part of the year, you'd be eligible to receive tax credits to purchase high-quality private sector health insurance credits. You are eligible under the present law. These tax credits go directly to the insurance company, not to the individual. They never touch the penny. Once you are able to enter the workforce, you will see a dramatic increase in your wages, which justifiably leads to a corresponding decrease in tax credits you receive to help you afford the insurance. Meaning the more you earn, the more responsibility you shoulder, and the less you receive in tax credits. But this bill would require middle-class workers to pay back a greater share of the tax credits they received while they were unemployed should they find a job later in the year or receive a year-end bonus. That makes no sense. It's like forcing a family to repay back all the unemployment compensation they relied on during the temporary time of joblessness as a punishment for finding a job. By forcing families to repay back these credits if they are successful in finding a job, my colleagues on the other side of the aisle are taxing success and penalizing work. And I see my time has expired. I'll ask one of my colleagues later to give me more time to further explain the bill.
Mr. Teaberry.
Thank you, Mr.
Chairman of the Select Revenue Subcommittee.
I'll withdraw my point.
Deja vu all over again. I think I heard that speech before, Mr. Crowley. And let me say with a straight face, and I think Mr. Barthold said with a straight face, this is not an income tax increase. And I wish my father were here, because he would say, if you are given more than you are entitled to, whether it's a mistake or not, letting you keep it is not right. Bottom line. And I'll remind the gentleman from New York that he ultimately voted for this policy not once, but twice. So I know it's election year, and I know it's kind of the silly season, but this is, again, Mr. Chairman, deja vu all over again. You can say it 100 different ways, but at the end of the day, with a straight face, this is not a tax increase.
Will the gentleman yield?
And my dad, who has a 6th grade education, would understand that quite well.
Will the gentleman yield?
I will yield.
Mr. Teaberry, you are aware that the individual never, ever receives directly the benefit that you're
That's
talking
not the point. The point
I'm
was,
asking
you
you a
said
question,
this
though. I'm
was,
just asking you a question.
I'll reclaim my time. The point is, this is not a tax increase. Mr. Barthold said that. I'm saying that with a straight face. We can talk about all other kinds of issues, but this is not a tax increase. And as my working class father would say, if you're not entitled to it, you shouldn't get it. I yield back.
All right. Mr. Johnson. The point of order is withdrawn. Mr. Pascrell.
Thank you, Mr. Chairman. Mr. Chairman, I fully support the Crowley amendment because I believe we should not raise taxes on working class Americans. I would say to my very good friend, Mr. Teaberry, my father had a sixth grade education also, and we would both agree they were probably the smartest people we ever met in our lives. But your father and my father, knowing your background and knowing my background, would simply have come to the conclusion before these amendments and before the bill that when you're trying to take the entire insurance bill, in this case, away, affordable health care bill, why are we, picking it apart? Why don't we just say, what we feel up front? Because our parents were very practical and had full of common sense. They didn't have time because they were working to put bread on the table. They didn't have time to mess with something that you wish goes away and I wish does not. If we debate that issue, that's another thing altogether. When you take away the tax credits that middle-class America use when purchasing insurance, plain and simple, their taxes will go up if they decide to keep their insurance. My problem with this bill, to begin with, is that we're hurting the wrong person. We're taking the money from those folks, the credits, away from the individual. We're not forcing the insurance company, which is the original person that get the credits. They're the entity that gets the credit. Why aren't we asking the insurance companies to fork up? If my friend from Georgia said before, if someone is getting too much more than he's supposed to get. And I would agree with you on that principle, but I think your bill does not really measure up to what you're trying to do. You're hurting the wrong people. I really believe that. Under the current proposal, if they keep their insurance, their tax liability will increase. There's no two ways about it. I don't care what you call it. Mr. Crowley's amendment will ensure that this tax increase on working class Americans will not occur. I support this amendment because I do not support this increase on America's working class who simply decide to provide health insurance for their families. I will yield to Mr. Crowley.
I thank the gentleman. It really is the silly season. I agree with that. When my colleagues on the other side of the aisle would suggest that a $44 billion increase in revenue that comes from somewhere, it's coming from individuals, it's coming from, Mr. Teaberry would have to agree, it's coming from individuals. They are giving money, they're being forced to give money to the federal treasury. I don't know what you call that but a tax. It is a tax. We are taxing the middle class because they're doing better. I'll yield in a moment. It's not my time. You have to ask Mr. Pascrell. It is because they're doing better. Because, when a person gets unemployment insurance, they get it for a certain portion of the year. And then when they get a job, we don't ask them to pay back the money that put food on the table, that helped them pay their kids' tuition, that helped them afford the drugs that they need, except when it comes to health care. Because a person didn't have a job or because there's a change in a family structure, either by divorce or by the loss of a child or a loved one, that they no longer are eligible for those credits going forward. We then ask them to pay it back, not the insurance company, not the entity that actually receives the money. Yeah. Understand, the taxpayer never touches a penny of it. Not a penny of it does the taxpayer touch, yet they're the ones who have to give it back. It really makes no sense. It is a tax. Yeah. In essence, the American people who are earning $90,000 or less, who are eligible for these tax credits, once they go over the limit, they have to pay it back. It is a tax to the Treasury. You can paint it any way you want. I know you all have taken a pledge that you will not raise revenues. You have sworn an oath to Mr. Norquist that you will not raise revenues. I take an oath just about every day. It's the Pledge of Allegiance. That's the only pledge I'm taking from now on. And I think we should all adhere to that. It is ruining the process here in Washington. It's ruining this country as well. This notion that no matter what, we will not raise taxes. Well, you're doing it here. You're actually breaking your own pledge by voting in favor of this bill today. And I'll yield back to my friend from New Jersey.
Mr. Chairman, I think that Mr. Crowley has succinctly placed in front of us some very, very important arguments that we should reconsider. I know that's a script here, but think about it. Anyway.
Time's expired. Dr. Bustani is recognized for 5 minutes.
Thank you, Mr. Chairman. At a time of record deficit spending and debt, I think we all care about that, and we know we have to do something. And I think we all deeply care about rooting out waste, fraud, and abuse, and misuse, however you want to term it. I can tell you, as chairman of the Oversight Subcommittee, we have worked and had a number of hearings to look at how we can find waste. And every one of us goes home and faces our constituents, and one of the first things that comes up in any town hall meeting is, what are you doing to root out waste, fraud, and abuse? And many of our constituents think we can solve the Medicare problem by dealing just with waste, fraud, and abuse. Bottom line is, we have to address this, and we have to address it in a serious manner. Now, requiring people to repay subsidies that they were ineligible to receive in the first place is not a tax increase. And to claim that it is does not pass the straight-face test. I guarantee you, you go back and talk to any of our any constituent in this country, and they're not going to accept that. Now, I want to just read back a quote from Secretary Sebelius in December of 2010 in reference to the doc fix and the Medicare extenders, which was being offset by subsidy recapture. And I quote, she said, "It also changes the way overpayments of health insurance premium tax credits are paid back, making it fairer for recipients and all taxpayers." Now, overpayments and fairer. Pretty simple. It's pretty simple. This is not a tax increase. This is basically recapturing money that was paid out for those who are ineligible to have received that money in the first place.
Well,
so
gentlemen, yield.
I support our proposal, and I oppose the gentleman's amendment.
Well, gentlemen, yield.
Back to the chairman.
Gentleman's yield back. Ms. Berkeley is recognized for 5 minutes.
Just for a minute.
I'd like to yield a minute to my colleague, Mr. Crowley.
Thank you, Ms. Berkeley. Let's for a moment hypothetically agree. I don't agree, but hypothetically agree that this measure will not raise taxes. Then why not vote for my amendment? Why not vote for my amendment then? If you believe that this is not raising taxes, why won't you support this amendment? Because simply what it says is, if it raises taxes, it will be null and void. But not a one of you will support this amendment, because you know in your hearts it does raise taxes. The proof is in the pudding. Support the amendment, and then you'll be putting your money where your mouth is. Oppose it, and we know what that is.
Will the gentleman yield?
The gentlelady. She has the time.
Will the gentlelady yield?
No, I'd like to make my statement. If I have extra time, I'll be glad to yield it.
You have the time.
Thank you, Mr. Chairman. Let's be frank. We're here today because the Republican budget, a budget that was so out of touch that instead of working to create jobs, instead of standing up for our veterans, instead of protecting Social Security, it's trying to dismantle Medicare by turning it over to private insurance companies. Republican leadership directed this committee to find tens of billions of dollars in savings to avoid automatic cuts next year. But are we asking big oil executives who made $137 billion in profits last year sacrifice? Are we asking corporations that ship jobs overseas to pick up the slack? No. Today we are voting on another series of bills and amendments that protect these special interests and find savings by eliminating tax credits and programs vital to Nevada's families, children, and seniors. Today we are voting to put affordable health insurance for over 200,000 Nevada families at risk, to discourage families from accessing tax credits to ensure the health and welfare of their children. We are voting to permanently eliminate a program that provides vital social services to 166,000 Nevada seniors, children, and individuals with disabilities. Under these proposals, Nevadans will lose nearly $16 million to fund programs like foster care, child protective services, employment services, transportation and nutrition programs for seniors. We should not be asking hardworking middle-class families across America to sacrifice even more when they're already struggling to make ends meet. The people of my state are facing the highest unemployment rate in the country and the highest mortgage foreclosure rate in the nation. They are worried about putting food on their table, filling up their gas tanks, and putting clothes on their children's backs. People come over to me all the time. They say, Shelley, I've never missed a day of work. I've never missed a mortgage payment. I've lost my job. I've lost my home. What am I going to do? None of these bills today will answer that question. We need to refocus our work on finding practical solutions to put people back to work and support the middle class, not special interests. That's clear to Nevada families. It's unfortunate that it's not clear to this committee. And if this is not a tax, I know we're now degenerating into whether it's a tax or not a tax argument. But if it's not a tax, why are we discussing it in front of the Ways and Means Committee, which is the taxing committee in this Congress? And I yield back.
Will the gentleman yield?
She has yielded back. Mr. Roskam's recognized for 5 minutes.
Thank you, Mr. Chairman. You know, Mr. Chairman, I took a minute to read through this amendment, and it's just a couple of sentences. And I think that there's a flaw here that we haven't discussed, and that is the question in the amendment isn't whether this is a tax or not. The question in the amendment on line 5 is whether the Secretary of the Treasury or the Secretary's designee decides whether this is a tax or not. Now, this is the key point person in this administration that has argued in the alternative about whether this is a tax. This we've heard from one voice in the administration that has said, no, 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 no. The financial impact, if you don't participate in the health care law, that's not a tax. It doesn't rhyme with a tax. It's something other than a tax. It's anything other than a tax. They would stiff-arm the word tax affiliated with the new health care law to keep those things as far apart as they possibly could. Now in the court, what is the administration arguing? The administration is arguing, oh, no, no, we have this authority. We have the authority under the Commerce Clause because we've got the ability to tax, and yes, it is a tax. Now, why in the world would this committee, who is charged with making these definitions, yield this authority to the administration that can't make up their minds what is a tax and what isn't a tax? It's this committee's responsibility to make that determination. This amendment doesn't do it. This amendment says, let the Secretary of the Treasury, or not even the Secretary of the Treasury, the Secretary's designate or his delegate. This is poorly crafted. It's gamesmanship. It's absurd. We should vote it down. I yield back.
Mr. McDermott's recognized.
Mr. Chairman, I appreciate Mr. Crowley's amendment because I noticed that this committee hearing is not being televised. And I'm sure that there would be a desire not to have the American public watch a group of us who make $180,000 a year discuss what is happening to people making the median income in this country is $50,000 for a family of 4. Now, anybody who's lived in that median level understands that you are looking for every nickel and dime to make it, to pay your rent, to pay your gas, it's now $4.17 a gallon in Seattle, to pay your electricity, and to have at the end of the year to be stuck by the IRS with a tax because you've had a death in your family and you got some additional money, or you've had a divorce and something's changed in your economics, or you've gotten a job after being laid off from being unemployed, or you've finished a job training program and gotten a job, and suddenly somebody comes in and taxes you to take back the money that you've been given. doesn't understand that $100 to an ordinary person making $50,000 a year is a bag of groceries. To people up on this dais, $100 is nothing. I mean, most of us can afford an extra $100 if we're taxed by the IRS. But to people making 50 grand who are just barely making it, and then we stick it to them just when something goes well for them, or something goes bad for them or whatever, is simply not the way America ought to be. We're trying to give people economic security and trying to give them health security, and we're coming after them. Right when something good happens to them, we think, and so we say, well, give it back to us. To me, that's not what we ought to be doing on this committee. That's why I support Joe Crowley's. Joe, I yield a minute to Joe.
I thank the gentleman. I know that my colleagues on the other side of the aisle would prefer that we maybe had in the legislation itself substituting on line 5 for Secretary of the Treasury or the Secretary's delegate the name Grover Norquist. But that we saw no precedent for that. And so therefore, that was unfortunate. We couldn't include his name in the legislation itself. But I guess that he has become the arbiter of what is or is not a tax in this country. As unfortunate as that may be, we felt that a constitutional officer, the Secretary of the Treasury, would make sense. If my colleague, Mr. Roskin, or anyone else on the other side of the aisle has another suggestion for a constitutional officer to determine what is or is not a tax, we'd appreciate hearing that suggestion. And I yield back to the gentleman from Washington.
Taking my time back, I would say one other thing. What is really crazy, there ought to be a public service announcement to not allow children to watch the Congress operate. Because what they are seeing here is we're worrying about $46 billion we're going to take back to people under 400% of poverty, and tomorrow we're going to add $46 billion to the deficit by giving it away to 3.3% of the population. We're going to give it to small business. That means 4 guys in a hedge fund who last year made $40 million or $40 billion, and they're going to get a 20% tax reduction. There is no sense whatsoever in doing this to people struggling at the same time that we're shoveling out the back door to people on the top who are going to get about half of the money will go to people making more than $1 million a year. That simply doesn't make sense. It is not what's fair. It's not economic justice. It's taking away opportunity from people in this society, and I think we ought to vote for Joe's amendment.
Thank you. I would just say to the gentleman that this meeting is being streamed live, as has been the practice of the committee for several years. Yeah. Mr. Nunes is recognized for 5 minutes.
Thank you, Mr. Chairman, and we've seen this storyline before. It's very predictable. Republicans are out to hurt veterans, women, children, little puppies. It's the same old thing. And then always we're in support of big oil, Halliburton, Wall Street fat cats, hedge fund managers. I'm actually a little shocked we haven't heard today nobody's blamed Bush, or perhaps I missed it.
Would the gentleman yield?
Would you like to blame Bush? But I actually will yield because I only have one question. A few on the other side said they're hurting the wrong people. I'd like to know who the right people are to hurt. And I will yield if someone will answer who are the right people to hurt.
Is the gentleman directing the question to anyone in
Yes.
particular?
Will you yield to me?
Yes, who are the right people to work?
Gentleman
I'll
from
yield to the ranking
California has
member.
some time.
Yeah, if you want to call it hurt, yeah, I think people who are making over $1 million should pay taxes consonant with their ability to pay. And now I'll mention Bush. Essentially what you're saying is the way the budget reads, you don't touch the taxes on millionaires, What you do is tax the programs on the middle class and the most vulnerable. And we see it here. We'll see it when it comes to Social Security, the next bill. And we'll see it on the block grant. You mentioned children. That's what the block grant is all about. You mentioned the elderly. That's what the block grant is all about. That's what you're doing. You have a complete wall to prevent any taxation of people making $1 million, and tomorrow you bring up a bill, half of it, more than half, goes to people with income over $250,000. Today, we're taking away programs that benefit middle income.
I'd like to reclaim my time, Mr. Chairman.
That's
and I will remind the members that they have voted for this very same amendment before. Matter of fact, it even passed the House a few years ago, and I think Mr. Teaberry would like to make a clarification on that, and I'll yield to him.
Well, the question I was going to ask, thank you, Mr. Nunes, is that this provision, subsidy recapture for everyone out there and who's watching this streaming live, was passed by the House, signed by the President. Every Ways and Means Democrat voted for it. The subsidy capture provision.
The gentleman yield.
In December of 20.
That's not accurate.
In December of 2010, a subsidy capture provision was used to help pay for the dock fix. A subsidy capture provision was debated in this committee on the 1099 bill.
Will the gentleman yield?
That was signed by President Obama and supported by Senate Democrats. The same argument, and none of them, the President, Senate Democrats who voted for this, none of them said this was a tax increase. In December of 2010, or when the 1099 bill became law last year, the one that was debated in this committee that was supported by your fellow House Democrats, not you, but in December of 2010, a similar provision, a subsidy capture provision, was used to help fund the SGR fix. And I just want to clear the record. The historians could go back and look at it and read it, but it was a subsidy recapture provision like this one. Mr. Chairman, I yield back.
The gentleman from California has the time.
I'll yield to the ranking member.
It's just not true that there was a vote to eliminate. That's not true. It wasn't. This is the first time that this is being brought before this committee to totally eliminate this provision.
Look, the gentleman yield. The gentleman yield. It was a
reclaiming my time and yielding to Mr.
It was a vote
Teaberry.
to recapture the overpayment. The issue that I talked
Some
about
of it,
before.
never to eliminate it.
Well, it was a vote to recapture overpayment. The issue is overpayment that Mr. Barthold said is not a tax increase. The issue we're talking about now is overpayment. You passed a bill to recapture overpayment in December of 2010. If it was not a tax increase now, recapturing overpayment was not a tax increase then. Was not a tax increase when the President signed the 1099 bill. It was about recapturing overpayment. I mean, my 8-year-old daughter could learn a few things if she watched us in this debate today.
Well, the gentleman
Time has
Which she's
expired.
able to do. She can watch on cspan.com if she'd like. I yield back, Mr. Chairman.
Gentleman's time has expired. Yep. You've already been recognized on this amendment, I believe. All right. Your gentleman from California is recognized for 5 minutes.
Thank you, Mr. Chairman, and I won't use up the 5 minutes. I think Mr. Crowley said it best.
Oh, no.
This amendment only applies if the underlying bill proposed by our Republican colleagues amounts to a tax increase. If it's not a tax increase, then Mr. Crowley's amendment is neutral. In fact, Mr. Crowley's amendment is simply a backstop to make sure that there would be no tax increase. And so, as Shakespeare said in Macbeth, in Hamlet, methinks the lady doth protest too much. Wikipedia tells me that the phrase has come to mean that one can insist so passionately.
Would the gentleman yield?
In a second, I would be.
It's Macbeth.
The phrase has come to mean that one can insist so passionately about something not being true that people suspect the opposite of what one is saying. So, if it's not a tax increase, then support the amendment.
Will the gentleman
And
yield?
It'll become, in just a second, I would be more than happy to yield to my colleague. Then we resolve it. We essentially assert a truth that this is not a tax increase by confirming this amendment and adding it to this bill to make sure that it is not a tax increase. Otherwise, I refer to what Mr. Levin said, and that's the cruel game that's played here, where we could ask millionaires and billionaires to contribute a little bit more through the Buffett rule and provide the same amount of revenue instead of asking middle-class families to have to contribute more in their taxes as well. It's a very simple matter, and so let me yield to the gentleman.
Was the subsidy recapture that was part of the doc fix in 2010 a tax increase?
I would tell the gentleman, we're talking right now about taxing several million middle-class families to the point that several hundred thousand might find themselves not purchasing health insurance.
This was a subsidy capture provision that was in the
reclaim my time.
original bill, and this is a subsidy capture
I could reclaim
provision.
my time. I would just simply say that on this measure that's before us today, we could essentially assert what my colleagues and friends on the other side of the aisle are asserting. This is not a tax increase by confirming that we really mean it. Otherwise, as Mr. Crowley said, I think we're confirming what Shakespeare said in Hamlet,
Macbeth.
that there's too much protesting about what this isn't. And so I would just urge my colleagues to support this very simple measure, which is one page, and it simply says,
would the gentleman yield?
don't let this increase if it's a tax increase. Certainly, I will yield.
I'd like to just point out that's Macbeth, not Hamlet. So we're going to be factually correct. I know it's easy to change things around.
And I would love to believe the gentleman, but I went ahead and thought it was Macbeth as well, and I checked, and it's Hamlet. So I'll correct the gentleman.
I think I'm prepared to have Mr. Crowley close on his amendment. Gentleman from New York is recognized.
We're not going to
I will not protest too much. Just a little bit. Thank you, Mr. Chairman. Let me just make another point in the closing here in reference to a name that has popped up, I think maybe more times than all of us are comfortable with, and that is Mr. Grover Norquist. In his writings, and I cite the letter he sent to Chairman Camp dated February 28, 2011, on the occasion that this committee last voted on legislation to amend the tax credit portion of the Affordable Care Act, we will see that under his rules, this underlying bill does violate his pledge of raising taxes. Mr. Norquist argued at that time that while changing the true-up structure was a tax increase, it didn't violate his pledge, as it was tied at the same time simultaneously to the repeal of the 1099 provision. Miscellaneous tax reporting requirements. It was a net tax cut and therefore didn't violate his pledge. But this time, as I believe was highlighted earlier, there is no net tax cut bill attached to this $44 billion tax increase. So it's plain and simple. This underlying bill is a tax increase. I believe that to be the case. It is a tax increase. This underlying bill is not about fraud. It is not about being a good steward of the taxpayers' money. It's not about cutting taxes. It's about raising taxes on working families who earn under $90,000 a year. And most egregiously, it is punishing work. I agree. I think that this esoteric argument about what constitutes a tax is ludicrous that we're having it, because it's so blatant on its face. If you're raising $44 billion from the American people, it's not coming from the insurance companies. This is not a tax on insurance companies. This is a tax on the American taxpayer. They will be the one who has to pay this money back. This bill must, I believe, be passed, and I would ask my colleagues, once again, as Mr. Becerra has emphasized, if you don't believe that what we're doing today is raising taxes, then you should have no problem whatsoever in supporting this legislation. Just go along with me on it. If we're not raising taxes, humor me and just vote for what you believe is a nonsensical bill. But if you're voting no, you must believe that in some way this bill has substance. That this bill is of substance because you're voting, you're taking an affirmative action to vote against it. Vote for it if it's nonsensical. A vote for it says to me, I'm ludicrous. A vote against it means that it's a bill of substance and that you believe in voting for it, you would be raising taxes. I'll yield back the balance of my time.
The question is on agreeing to the amendment offered by the gentleman from New York. All those in favor signify by saying aye. Aye. Those opposed, no. No. In the opinion of the chair, the noes have it. Are there a sufficient showing of hands? A roll call. The clerk will call the roll.
Mr. Herger?
No.
Mr. Herger, no. Mr. Johnson?
No.
Mr. Johnson, no. Mr. Brady?
No.
Mr. Brady, no. Mr. Ryan? No. Mr. Ryan, no. Mr. Nunez? Mr. Teaberry? Mr. Teaberry, no. Mr. Davis? No. Mr. Davis, no. Mr. Reichert? No. Mr. Reichert, no. Mr. Bustani? No. Mr. Bustani, no. Mr. Roscom? No. Mr. Roscom, no. Mr. Gerlach? No. Mr. Gerlach, no. Mr. Price? No. Mr. Price, no. Mr. Buchanan? No. Mr. Buchanan, no. Mr. Smith? No. Mr. Smith, no. Mr. Schock? No. Mr. Schock, no. Ms. Jenkins? Ms. Jenkins, no. Mr. Paulson? Mr. Paulson, no. Mr. Marchant? Mr. Marchant, no. Mr. Berg? No. Mr. Berg, no. Ms. Black? Ms. Black, no. Mr. Reed? No. Mr. Reed, no. Mr. Levin?
Aye.
Mr. Levin, aye. Mr. Rangel? Mr. Stark?
Aye.
Mr. Stark, aye. Mr. McDermott? Aye. Mr. McDermott, aye. Mr. Lewis? Aye. Mr. Lewis, aye. Mr. Neal? Aye. Mr. Neal, aye. Mr. Becerra? Mr. Doggett? Aye. Mr. Doggett, aye. Mr. Thompson? Aye. Mr. Thompson, aye. Mr. Larson? Aye. Mr. Larson, aye. Mr. Blumenauer? Mr. Kind? Aye. Mr. Kind, aye. Mr. Pascrell? Aye. Mr. Pascrell, aye. Ms. Berkeley? Aye. Ms. Berkeley, aye. Mr. Crowley? Aye. Mr. Crowley, aye. Mr. Nunez? No. Mr. Nunez, no. Mr. Rangel? Mr. Becerra? Mr. Blumenauer? Mr. Blumenauer, aye. Chairman Camp?
No.
Chairman Camp, no.
How is Mr. Becerra recorded?
Mr. Becerra is not recorded. Aye. Mr. Becerra, aye.
The clerk will report the vote.
14 yeas, 22 nays.
There being 14 ayes and 22 noes, the amendment is not agreed to. Are there any additional amendments to the committee print relating to the recapture of federally subsidized health insurance overpayments? If there are no further amendments, I will now recognize Mr. Herger for the purpose of offering a motion.
Mr. Chairman, I move that the committee transmit the committee print related to recapture of federally subsidized health insurance overpayments to the Budget Committee pursuant to the reconciliation instructions included in Section 201 of H. Con Resolution 112, the concurrent resolution on the budget.
The question is on transmitting the committee print to the House Committee on the Budget. All those in favor signify by saying aye. Aye. Those opposed signify by saying no.
No.
The ayes have it. The motion is agreed to. The committee print is adopted. The committee print related to the recapture of federally subsidized health insurance overpayment is ordered transmitted to the House Committee on the Budget, and without objection, staff is authorized to make technical and conforming changes to the committee print. The committee will now proceed to consideration of the committee print on budget reconciliation legislative recommendations relating to Social Security number requirements for refundable portion of the child tax credit, which was distributed in advance. Without objection, the committee print will be considered as read and open for amendment at any point. I will again turn to Mr. Tom Barthold to provide the technical description of this matter, and I would ask that members hold their questions until after his presentation. Mr. Barthold.
Thank you, Mr. Chairman. Very briefly, under present laws, the members are aware the Internal Revenue Code provides a child tax credit. The maximum amount of the credit is $1,000 through calendar year 2012 and $500 thereafter. To the extent that the child tax credit is not allowed to offset the taxpayer's tax liability, the taxpayer may be eligible for an additional credit amount which is refundable. This is subject to limitations based upon earned income. No credit, however, is allowed to any taxpayer with respect to any qualifying child unless the taxpayer includes the name and taxpayer ID number of the qualifying child on the tax return. The proposal before the committee would add the additional requirement that that additional child tax credit is allowable only if the tax return includes the taxpayer's Social Security number, or in the case of a joint return, the Social Security number of either spouse. The rule does not apply to the extent that the taxpayer's tentative minimum tax exceeds his or her earned income tax credit for the taxable year. And the proposal, I'm sorry, Ms. Berkeley, the proposal adds an additional requirement that the additional child tax credit is allowable only if the tax return submitted includes the taxpayer's Social Security number, or in the case of a joint return, the Social Security number of either spouse. And that rule does not apply to the extent that the taxpayer's tentative minimum tax exceeds his or her earned income tax credit for the tax year. The proposal's effective for taxable years beginning after the date of enactment, so that means generally for tax years beginning in 2013.
Thank you. We'll now move to questions. Mr. Levin.
Thank you, Mr. Barthold. Let's try to understand the potential impact of this recommendation and who's impacted. So I'm speaking on behalf of all of us on the Democratic side, and there'll be other questions. Let me ask you about the impact. Based on your analysis, how many families would be affected by this program in the year 2013?
The number, the thrust of the program is requiring a Social Security number in lieu of other taxpayer ID numbers. So we have run some tabulations on Internal Revenue Service from tax year 2010, and the number of returns filed with only the individual tax identification number, the so-called ITIN, in 2010 was approximately 3.1 million returns. Now, of those returns, only approximately 2.3 million returns claimed the additional child tax credit.
And what is your analysis as to how many children would be affected by this?
Well, we've estimated that the number of returns really affected by the proposal in 2013 would be approximately 1 million returns. Now, the additional child tax credit, remember, is only available for families with 3 or more children. So if it's 1 million returns affected, it would have to be something in excess of 3 million children related to those 1 million returns.
In excess of 3 million?
Yes, sir.
And can you tell us what's the average AGI reported on all returns claiming the additional child tax credit?
Again, looking at data available to us from tax year 2010, the average adjusted gross income for those returns claiming the additional child tax credit was $22,400.
And what's the average AGI reported on returns claiming the additional child tax credit in which no filer has a Social Security number?
It's almost the same amount, Mr. Levin. Again, tax year 2010, average adjusted gross income on those returns with the additional child tax credit and no Social Security number was $22,200.
And if you could tell us what percentage of children claimed under the child tax credit or the additional child tax credit have Social Security numbers? The percentage of children.
Have a Social Security number, okay. Approximately, again, looking at the 2010 data, approximately 92% of children had a Social Security number claiming where the additional child tax credit was involved. So by subtraction, approximately 8% had a taxpayer ID number other than the Social Security number. That's of the children, not of the taxpayer themselves.
So the percentage of children claimed under the credit having Social Security numbers is about 92%?
Yes, but remember, Mr. Levin, I may need to clarify. Under present law, the child has to have a valid taxpayer ID number. That can be either a Social Security number or an individual tax identification number. But, of those with a valid tax ID number, 92% of those valid tax ID numbers were Social Security numbers.
Okay. And are there returns that are filed where the taxpayer or the spouse files using an ID number and some or all of the children claimed for the purposes of the credit have Social Security numbers?
Well, I may be misunderstanding your question, Mr. Levin, but as I just noted, most of the children claimed under the additional child tax credit do have Social Security numbers.
Okay.
So that would be the most normal case.
Mr. Chairman, I have letters that I would like to introduce into the record. The first is a letter from the U.S. Conference of Catholic Bishops opposing this proposal. The second is a letter from the National Council of La Raza that estimates that 85% of the families affected by this recommendation are Hispanic. The third is a letter from the National Women's Law Center opposing this provision, indicating half of all poor children live in families headed by single mothers. And the fourth is a letter from the American Federation of State, County, and Municipal Employees.
Without objection, time has expired. Mr. Johnson's recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank you for bringing this measure before the committee. It's a common sense and bipartisan measure to close a loophole that's costing American taxpayers billions of dollars. Mr. Chairman, right now the IRS is providing the refundable child tax credit to those who are here illegally. But don't take my word for it. In a report issued last year by the Treasury Inspector General for Tax Administration entitled Individuals Who Are Not Authorized to Work in the United States Were Paid $4.2 billion in refundable credits, according to the IG. Quote, although the law prohibits aliens residing without authorization in the United States from receiving most federal public benefits, an increasing number of these individuals are filing tax returns claiming the additional child tax credit. Mr. Chairman, I'd like to submit this highlights one-pager from the IG for the record.
Without objection.
In response to the IG report, Senate Democrat Claire McCaskill has called on the IRS to stop such payments to individuals without Social Security numbers. In a letter to the IRS commissioner, the senator wrote, quote, "If necessary, I'm prepared to pursue legislation immediately to give the IRS the authority to stop improper payments before they are made. Wrongful payments of refundable tax credits should be easy to identify and stop. The law is clear that individuals who are not authorized to work in the United States are not entitled to public benefits." Mr. Chairman, I would like to submit the Senator's press release and letter for the record.
Without objection.
Even the administration supports preventing illegal immigrants from getting public benefits. The President's budget would, as the Washington Post characterizes it, ramp up funding for a program known as SAVE Systematic Alien Verification for Entitlements, which, according to Homeland Security, seeks to prevent individuals from obtaining benefits they are not eligible to receive by checking their immigration status. So especially in light of this, I think the American people would be right to ask, why wouldn't my friends on the other side support this common sense measure? Mr. Bartold, I have some questions for you. I'd like to start off by clearing up some possible confusion the other side may have over this measure. Some have suggested this measure would do away with the child tax credit for modest income families. So to start off, the measure before us just deals with the refundable portion of the child tax credit. Is that correct?
That is correct, Mr. Johnson.
Now, the intent of the measure is to prevent those who are here illegally from getting the credit. Someone who is here illegally can get the refundable child tax credit by getting an individual taxpayer identification number issued by the IRS because by law they are not supposed to have a Social Security number. Is that correct?
That is also correct, sir.
And is it difficult to get an I-10?
It is not particularly difficult, sir.
Now let me ask, is it possible then that a tax filer who has zero tax liability, meaning that they make too little to pay $1 in income tax, can receive up to $1,000 per child from the IRS? Is that correct?
Just a point of clarification, or the $1,000 tax credit amount is the applicable amount for 2012. In 2013, under present law, that amount would be $500, and the additional child tax credit has the additional requirement of you have to have earned income. But your general statement is correct, sir.
Thank you. Now, some of my friends on the other side argue that even though those who are here illegally make too little to pay income tax, they do pay payroll tax. We asked you to do some analysis on this refundable credit. According to that analysis, which you provided in a September 27th letter to me, 16.4 million filers have a child tax credit that exceeds their income, plus payroll and SECA tax liabilities. And this is approximately what percent of those who receive the child tax credit?
As we reported to in the fall, sir, that's approximately 44%.
So it's nearly half of those getting the refundable child tax credit are getting a check from the IRS for more than they have paid in taxes. Is that correct?
It's getting close to 50%, sir, yes.
Thank you, Mr. Chairman. I yield back.
Thank you. Are there any further questions?
Mr. Chairman.
Mr. Neal.
I think, Mr. Chairman, thank you. I think Mr. Johnson's correct with the word analysis. And that's what there has not been here, an analysis. Two very successful anti-poverty programs have been the Earned Income Tax Credit and the Child Tax Credit. And the Child Tax Credit, which is the subject of today's hearing, it should be noted that there are still in America 1 in 5 children in families who live on less than $22,000 a year. Even more troubling, 1 in 10 children live in families with incomes of $11,000 a year. The child tax credit was designed to help families offset the high cost of raising children. The refundable portion of the child tax credit in particular is of immense value to low-income families who, in comparison to families of all income levels, spend the highest percentage of their income directly on their children. Like EITC, Ronald Reagan's favorite program, the child tax credit is very effective at reducing poverty. Together, the child tax credit and EITC kept 4.9 million women and girls above the poverty line in 2010. Now, a bill that would amend the child tax credit is the one that we're looking at today. It's a good example of how bad tax policy gets done when leadership dictates what the committee should act on. I'm a strong believer that tax legislation should be accomplished, and I, by the way, have gone back and forth with my own leadership on this issue. You will always get better legislation if it's fully vetted through a committee rather than an idea that is generated by the leaders. This tax area is very complicated, as you've heard the answers from Mr. Barthold this morning. And we need to be thorough in the analysis and avoid the unintended consequences, and that requires hearings in the Committee of Jurisdiction. The child tax credit legislation that we're voting on in a few minutes has never been the subject of a Ways and Means hearing. And frankly, we have not had a recent hearing on ways to improve the tax credit. It's very, very complicated, and I think we would be better served, as Mr. Johnson noted, by perhaps slowing down the process and closely examining the legislation before we vote on it today. Mr. Barthold, why were individual tax identification numbers created?
The purpose of the individual tax identification numbers was primarily to enable foreign individuals to file returns that may be necessary with the IRS, and for the IRS to receive information which they can then match to those individuals. It's not related to an immigration status or anything of that sort. It was to improve overall tax compliance.
And it's for the purpose of meeting federal tax obligations?
Yes, yes, sir.
How much does the federal government collect in income taxes from individuals who file their taxes using the individual tax identification number?
I will have to follow up with the committee on that, sir.
Would it be in the millions?
Oh, I would certainly imagine so. But I will have to follow up. I will follow up with the committee, sir.
How many children would be affected or impacted by this change to the child tax credit if it were to go into effect?
Well, as I think I noted to Mr. Levin, we had estimated that approximately 1 million tax returns would be affected. And since it relates to the additional child tax credit, which is only applicable in case of 3 or more, that it would be something over 3 million children related to those 1 million returns.
Okay. Lastly, what's the average income of these families that would be cut off by this policy change?
We have not projected that out for the whole period. I did report some tabulations that we did in 2010, and it was approximately, it was between the adjusted gross income of the taxpayers was between $22,000 and $23,000. That was in 2010.
Okay. That's really the issue. We're talking about people here who make under $21,000 a year. That's why we need to go forward with thoughtful analysis before we rush to a markup that's been dictated in the majority leader's office today. I yield back the balance of my time.
Mr. Brady's recognized.
I would thank all those taxpayers who labored for who knows how long to get their tax forms in yesterday. Would be pleased to hear there's actually one committee trying to fight fraud and waste within our tax system. So I applaud Chairman Camp and Chairman Johnson for bringing this forward. I would like to yield to Chairman Johnson.
Thank you, sir. I thank my good friend for yielding, and I might add we have had hearings in the subcommittee on these subjects, and most of these, in fact, some of them, don't even live in this country. They're illegal. So, Mr. Barthold, I have a few more questions for you. For budgetary purposes, this is technically considered an outlay, or in layman's terms, as spending. Is that correct?
Yep, Mr. Johnson, when we do our analysis and then provide it to the Congressional Budget Office for congressional scorekeeping purposes, they report this on the budget scorecard as an outlay. That is correct, sir.
This refundable credit is similar to the earned income tax credit, insofar as the amount of the EITC is based in good part on the filer's income and the number of children. Is that correct?
Mr. Johnson, you're correct. The earned income tax credit is based on number of children and amount of earned income.
Now, similar to the measure before us, the IRS also requires a Social Security number on the part of the tax filer in order to claim the EITC. Is that correct? Yes or no?
Yeah, Mr. Johnson, Congress made that a requirement of the earned income tax credit, that the Social Security number of the taxpayer be a valid Social Security number.
Thank you, Mr. Chairman. I would just note for the record that the Social Security number requirement for the EITC was included in the welfare reform law, which was supported by no less than such Democrats as former Senator and now Vice President Joe Biden, Senator Harry Reid, and current House Minority Whip Steny Hoyer, and signed into law by President Clinton. I yield back.
Gentleman yields back. Mr. Blumenauer. Oh, Mr. Blumenauer is recognized.
Thank you. Mr. Bartow, I want to just zero in for a moment on the nature of the population we're talking about, the million filers, because I heard some of my colleagues equate these people who were making the filing as being here illegally or not being qualified. Can you state with any assurance what the immigration status is of these million people?
Mr. Blumenauer, as I noted, the issue here is that there are refunds the proposal would affect returns which have other than a Social Security number. So that would, for example, be the individual tax identification number, the ITIN. The ITIN, as Mr. Neal asked, was created to permit U.S. enforcement of tax law relating to foreign persons. It doesn't. It was not created for any immigration purposes. If one is not eligible to work in the United States, one cannot get a Social Security number. Now, it doesn't mean that if you get an ITIN that you're here in the United States illegally, or that you're in the United States,
or that you're working illegally. I mean, I've got lots of people in my community who are highly skilled professionals who have green cards that, you know, would some of these people be able to file using this mechanism, the ITIN?
Mr. Blumenauer, first of all, I recognize that neither I or my staff are experts in immigration law. Now, we have done a little bit of background work. If one is here as a permanent resident, one is eligible to get a Social Security number. Now, I guess it would be possible that one could be using an ITIN, could have originally had an ITIN and be in the.
Well, I'm just trying to understand. I'm trying to understand.
Oh no, I
the
understand.
sweep that's
but
going
I'm saying
on.
that the general application is that non-citizens authorized to work in the United States, so like a green card person, they can get a Social Security number.
But they don't have to get a Social Security number, do they?
I guess that's, I imagine that is true. I imagine that is true, sir. I don't know if it's an affirmative requirement if they have to or not. I would have to follow up on that.
Okay. Well, Mr. Chairman, at some point, there are a couple of things that I would appreciate having clarification. This is an area that I confess not to be an expert, but I would like to get a sense of the sweep of people who can and do utilize this. I appreciate that we're not correlating tax data with immigration data. But there are probably ways to understand, first of all, what the law allows, and then if there's some sense of what we're involved with. If part of what we are doing with this alternative identification is to encourage compliance with the tax law regardless of immigration status, this results in getting a lot of money that is collected by the federal government that otherwise wouldn't. Is that not the case?
That's
We
the
had no mechanism.
that is the purpose of the I-10.
I mean, it wasn't a stupid thing. I mean, there was money that was being earned that wasn't being taxed, and people had no mechanism to comply with the tax law if they were here.
Well, Mr. Blumenauer, on that point, I should clarify a little bit. The I-10 is not supposed to be related to earned income.
Okay? But it's tax compliance.
It's tax compliance, but remember, foreign persons can have investments in the United States and unearned income.
All right, time has expired. Dr. Bustani is recognized.
Oh, excuse me. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. I want to offer some clarity in all of this. To Mr. Neal, the Oversight Subcommittee had a hearing on this on May 25th. We actually examined a number of refundable tax credits and the magnitude of fraud and abuse in those. Included in that hearing were discussions about the additional child tax credit. And in fact, we heard from the Treasury Inspector General for Tax Administration on this, and he made it very clear that with the ACTC, we've seen significant problems with this. In fact, the number of improper payments made to individuals not authorized to work in the U.S. has risen substantially. In fact, numbers that we discussed in the context of that hearing were basically improper payouts rose from $62 million in the year 2000 to $4.2 billion in 2010. So it's a significant problem. I want to compliment Chairman Johnson for approaching this and offering this bill as one way to address this issue.
Would the gentleman yield?
I'll yield.
My point of contention here, Dr. Bustani, is that we're all better served when legislation is vetted through the full committee, hearing witnesses day in and day out, and trying to cobble together legislation like this that comes from the majority leader's office, as opposed to standing with the historic responsibility of this committee, is an ill-considered way to proceed. And by way of my own positioning on this, I objected when it was done on our side as well, vehemently and aggressively.
Let me reclaim my time. We, since taking the majority, have really tried to take a very serious approach to oversight done by this committee on a whole host of issues. And it's been clear that TIGTA has put out a number of reports where there are substantial abuses and problems. And this was looked at in the Oversight Subcommittee. It's been, I know Mr. Johnson has looked at it and has worked on this legislation for a while, and hence the genesis of this approach. Clearly, we have to start taking serious steps to curtail these abuses, and I think this is a very important first step. And so I will yield back to the chair.
You have some time, but I just want to make a couple of points. One, there have been several hearings in 2 different subcommittees, and not every issue we address is heard before the full committee, and so there have been expert witnesses and testimony. The other thing is, and you've said this a couple of times, that this came out of the majority leader's office. It's just not true. This is something we as a committee decided to do based on Mr. Johnson's legislation. He introduced a bill on this issue after having had hearings that from both Tax Inspector General and other experts said this is a problem. And so I just want to not let it be characterized that somehow this committee is doing this because we got some direction from the majority. I've never had a discussion with the majority leader on this issue. This is something we saw was a problem, and it's not just in the child tax credit. It's in all of these refundable portions. The IRS is not a very good agency to send checks to people, and I've had many meetings with Doug Schulman on this issue, and I wish they'd send us legislation on how to fix it, but they don't.
Mr. Chairman, my point is that two of the great achievements of Congress have been the child tax credit and the earned income tax credit. And to have something of this magnitude and importance not vetted by the full committee with hearings is a mistake. And I think we just would have been better off if the full committee had this opportunity to hear from a variety of witnesses going forward on the topic.
Does anyone else seek recognition on? Yes, Mr. Lewis. Yes,
Mr. Chairman.
I have you and then Mr. Becerra after. You're recognized.
Mr. Chairman, I must state that I'm disappointed and deeply troubled by the continued attacks on our nation's most vulnerable. In the early months of this Congress, the 112th Congress, the subcommittee on oversight was used as a venue to attack an organization that represented millions of our seniors. The hearing was followed by a hearing on state and local pension plan where firefighters, librarians, and nurses was painted as villains. And today we have this child tax credit proposal which attacks our nation's children. Not children, the little one, the innocent one, the people who benefit from the child tax credit are American children. The people who claim the tax credit are their working parents. If immigration is your concern, set aside any view of the immigration status of their parents. It is irrelevant. The child's tax credit requires a child's Social Security number. The benefits goes to the United States citizen children. My God, listen, we're talking about families who raise their children on hourly wages of $10 or less. We all know how much it costs to raise a child, to feed a child, to clothe a child, to educate a child. This program helps keep young children out of poverty. So today, Mr. Chairman, the question must be raised. Where is our concern? Where is our compassion? Where is our heart? Where is our soul? I urge all of my colleagues to vote against this proposal. It is not right. It is not fair. It is not just. We can spend hundreds, thousands, millions, and billions of dollars to get tax cut for millionaires. Well, what are we going to do to help our children? Now, I make my statement. Mr. Barthorpe, is the population of undocumented immigrants, sometimes referred to as illegal alien, the same as the population of ITN holders?
Mr. Lewis, as I noted, one is not necessarily in the country illegally if they have an ITIN. An ITIN is an ID number that's issued to a foreign person. It says nothing about the immigration status.
Well, let me tell you that I'm concerned that person, legal president of the United States will be harmed by this proposal. I would like to understand more about the use of individual taxpayer identification number, ITIN in general. Does the use of an ITIN mean that the person filing in the United States is illegal?
No. The use of an ITIN says nothing about immigration status. So the short answer is no, it does not indicate that someone is in the United States illegally.
Do you see this proposal as necessary, that it's an urgency, necessity?
Well, Mr. Lewis, that's
a
what
policy
the committee's
decision,
debating. It's not.
But do you have an opinion?
The committee is elected by the people of the United
You know,
States.
the lights blinked a few minutes ago, a few moments ago. I think that was a sign. I think it was a sign.
Well, I'm not prepared. I'm not prepared to run for office yet, Mr. Lewis.
Well, thank you very much. Right. Thank you, Mr. Chairman.
Thank you. Mr. Herger is recognized.
Thank you, Mr. Chairman. I yield my time to Mr. Johnson.
You know, this bill's based on the work of the Treasury Inspector General, who said that the payment of federal funds through this tax benefit appears to provide an additional incentive for aliens to enter, reside, and work in the United States without authorization. That contradicts federal law and policy to remove such unauthorized workers. Based on JCT figures, the reality is there's a good number of tax filers who actually get more from the child tax credit than they pay in income tax. According to JCT, 16.4 million tax filers receive a child tax credit greater than what they owe in income and payroll taxes. 44% of the child tax credit recipients. So we're just trying to close a loophole that the Treasury Inspector General has provided information to us on. Thank you, Mr. Chairman.
Thank you.
Mr. Becerra.
Thank you, Mr. Chairman. First, let me clarify something. And with all due respect to my friend, Mr. Johnson, this is not a loophole. This provision has been in law for a long time. The Inspector General pointed out that ITINs are used the way Social Security numbers are used. But no one is violating a law. No one is trying to evade a law. In fact, a lot of these families are filing taxes and tax returns. Many people believe that immigrants, those that are undocumented, don't pay taxes. Well, this should clarify for a lot of folks that there are a lot of immigrant families who live in the shadows who still pay taxes, are paying their taxes and filing a tax return. This is not a loophole. The use of the tax credit is not illegal because it is a credit for children. It is a credit you use if you're filing taxes. Families are not living outside the United States to collect this. And let's clarify something else. People must file a tax return in order to be eligible for the child tax credit. On top of that, tax filers pay income taxes and payroll taxes. Now, as a result of deductions and credits, you can reduce your income tax payment to the federal government, perhaps altogether, and therefore pay no income taxes at the end of the year. But those credits and deductions are not available to reduce your payroll taxes that you pay to the federal government. And so those people filing their tax returns, including the families we're talking about right now, will be paying their payroll taxes up to the tune of $6,820 in payroll taxes. And so individuals are paying taxes. They may not be paying that much in income taxes, but individuals are paying taxes. And I think, Mr. Bartold, you made it very clear that filing an ITIN doesn't mean that you are unauthorized in the country to do work or to live in the country. Would that mean, Mr. Bartold, that there are people who are lawfully in the United States who file using the ITIN, who may have children and file a tax return, who would now be prohibited from being able to file for the child tax credit?
Mr. Becerra, I have to give you a little bit of a nuanced answer. If an individual needs a tax ID number and is not authorized to work.
Okay, but Mr. Bartold, that's not my question to you.
Okay.
Okay, let me
Well, that's the basis of the ITIN.
Okay. The ITIN can be used the ITIN was around and was created not so people who were unauthorized in the country could file their taxes. That wasn't the ITIN was created to give people a chance to file their tax returns. So my question, very specific, is could there be people in the United States who have filed a tax return, paid taxes, have children, and would qualify for the child tax credit, who, if this measure became law, would be denied the ability to claim the child tax credit?
If you'll permit me a slightly more than a yes or no answer, the answer would be yes, but such an individual, remember, since, as you pointed out, the child tax credit is based on earned income. The ITIN is essentially not supposed to be used with earned income. But if I presume that this individual who received the ITIN is working legally under, approved by, under visa or whatever, that individual would be eligible to get a Social Security number and either file an amended return with a Social Security number, or next year after they receive the Social Security number, file using the Social Security number. But so I think kind of I have a narrow answer, and I'm sorry to be so long and explain.
No. I appreciate that you always try to clarify, and you should, because you got to make sure the record is correct. But again, to my question, there are people who lawfully file their taxes using an ITIN who have children who would be denied this child tax credit if this measure became law.
As I just pointed out, we believe that, yes, that could be the case, again, with the nuance that the work...
I understand the nuance.
Okay.
Finally, Mr. Chairman, the letter has already been entered into the record, but let me read what the Catholic bishops have said. They strongly oppose this unfair proposal that, quote, would alter the child tax credit to exclude children of hardworking immigrant families. Proposals to deny the credit to children of working poor immigrant families, the large majority of whom are American citizens, would hurt vulnerable kids, increase poverty, and would not advance the common good. If you must find savings, I urge you to consider cuts that will not harm poor and vulnerable families, and to refrain from cutting essential programs such as the child tax credit. Yield back, Mr. Chairman.
The gentleman's time has expired. Mr. Teaberry is recognized.
Yes, thank you, Mr. Chairman. Just a couple things. The gentleman from Oregon, who's no longer in the room, and maybe I will try to reach him later, I think he said that he had a concern that he had high-tech workers in his district that had a green card but didn't have a Social Security card or Social Security number. Unfortunately, if that is true, they have a problem, because if you are a permanent resident in the United States, Mr. Chairman, like my mom was, you are required to have a Social Security number if you are going to work. If you're authorized to work, obviously, if you're a permanent resident, you're authorized to do a whole lot of things. But to work, you have to have a Social Security number, and I wanted to clarify that to Mr. Blumenauer. But I'd like Mr. Barthold to clarify an issue. If you are to actually claim the credit that we're speaking about today, you have to have earned income, correct?
That's correct. I pointed that out.
I thought you did. So, in order, go ahead.
No, continue your question.
So, you have to have earned income to claim the credit. Are there any scenarios where you have earned income that you wouldn't have a Social Security number?
Well, that's what I was discussing with Mr. Becerra is we can imagine a case where someone has had an ITIN for other purposes, is eligible, becomes eligible for work in the United States, and could file a return using the ITIN. Now, that individual can also obtain a Social Security number, in which case they would have two. You could have filed your return with the ITIN.
But generally,
and be completely legal.
But generally speaking, in order to file first off, in order to work, you have to have a Social Security card, whether you're a permanent resident or a citizen. In order to file a tax return for earned income, generally speaking, you have to have a Social Security number, correct?
To your question again, Mr. Teaberry?
Two questions. In order to work,
a non-citizen authorized to work can get a Social Security number. What I'm not clear on, and this is sort of an immigration law point, and I'll try and follow up, is I'm not sure if they're actually required.
I'm pretty sure they are, and we'd love to have a follow-up on that.
Maybe you can respond in writing.
And the second question is, if you are filing a tax return because you have earned income,
you need an ID.
Generally speaking, if you work, file a tax return, have earned income, the question would be, do you have to have a Social Security number? If you could follow up on that.
We will follow up.
Thank you.
Try and clarify on that.
Are there further questions? Mr. Pascrell is recognized.
Let me have some clarification on this, Mr. Barthard. We're talking about, as I understand it, looking at the legislation itself that's before us, we're talking about trying to save about $7.5 billion over 10 years. Is that correct?
That's correct, Mr. Pascrell.
So that comes out to be about $750 million a year. Is that correct?
Well, remember,
Close.
there's the 1-year delayed start. We do on the back of the document that we made available to you, JCX 35, the very last page, provides you a line-by-line estimate.
Most of the deductions that we've been looking to, or a group of us have been looking at in terms of saving money and putting money back into the Treasury, including this one, really affects those people who are the most vulnerable in our society. Do you think that's an accurate conclusion I've come to?
I think that's really sort of part of the discussion that the committee is having.
Well, when you look at the incomes that we're talking about, and when you're looking at those people who are part of earned income tax credit, how can you sit there and say that's part of the discussion? What am I missing here?
Well, I was just saying, Mr. Pascrell, that I try to avoid making value judgments.
Okay, let me make the value judgments then. Let me make the value judgments. Let's take the case of undocumented, illegal, called human beings, whatever you wish to call them. And the United States has every right to know who is in this country and who leaves this country. And that's not the debate today. That's not the debate at all. Should the children of undocumented, in terms of the tax code, be treated any different than the undocumented?
I think that's part of the discussion that you're having with your colleagues on the committee, sir.
Well, what do you think?
Again, as I'd noted, I think I best serve all the committee members if I let the committee members debate the important policy points.
Well, we do know that if they're born here to undocumented parents, they are citizens.
That's
Is that correct or incorrect?
That's correct, sir.
So we would not question, and you correct me if I'm wrong, we would not question their eligibility in terms of the tax credit, be it an I-10 they have, be it a Social Security number they have. They would certainly be eligible for this tax credit, were they not? Their parents, they have to file a tax claim in the first place in order to even be considered.
Well, as I pointed out in the brief run-through, Mr. Pascrell, the issue that the committee is looking at right now is, do you want to change the eligibility requirements for the advanced child tax credit? And do you want to make the requirement turn on the Social Security number as a tax ID number of the person filing the return?
I would contend on this particular item, knowing the very small, and $750 million is not a small amount of money, but in the scheme of things, Mr. Barthard, it is a very small amount of money compared to the entire budget, how much folks are taxed, how much the government spends. It's a very small part of it. When you come right down to it, these are philosophical issues. One we just completed, this one that we're on, and then we'll get into block grants. We're not talking about tremendous savings to the American people over a period of time. We're talking about a philosophical difference about who are eligible programs and who are not. We, on this side of the aisle, want justice just as much as the folks on the other side of the aisle want justice. But we want justice for everybody. we want just for anybody. And I'm tired of hearing the deductions that we are considering. In fact, a candidate for President of the United States, I don't know if you've seen the news or heard the news over the last 4 or 5 days, a candidate for the United States has even suggested that we do away with the mortgage interest deduction, which is very interesting, and particularly in my state of New Jersey. So we're looking at ways, and all the ways are about the middle class. Nothing about royalties, nothing about those other things you've heard debated and discussed. This is not about the money. This is philosophically about how we can best get over. Thank you.
The gentleman's time has expired. Mr. McDermott is recognized for 5 minutes.
Thank you, Mr. Chairman. Do I understand, Mr. Bartoli, that the child tax credit was originally enacted to deal with, at least in part, fighting child poverty?
Mr. McDermott, let's see, the child tax credit was enacted as part of the Tax Relief Act of 1997. And I can read you part of the legislative history for this committee, what the Ways and Means Committee said. The committee stated that it believed that the individual income tax did not reduce the tax liability by enough to reflect families' reduced ability to pay taxes as the family size increased. And
so it was basically to deal with children's,
it was basically,
give the parents
to make
the
an
ability to
adjustment
take care of their kids.
Family size to reduce the tax burden by family size.
And how many people will be affected by this bill?
Well,
how many children?
Well, as I'd noted, we estimated that for 2013, approximately 1 million returns, and those returns would represent households with at least 3 million children in total.
So here's the history that the committee is not paying attention to. In 1996, we got rid of welfare as we know it. It was a program that was aid for dependent children. It was a program that was put in 35 to deal with poor kids in this country and make sure they had food and housing and whatever. And we put in the child tax credit as a replacement for it because we knew that there were going to be poor kids who didn't have some protection. The lowest rates of poverty in this country among children were in 1969, when it was 13.8%. In 2010, it's up to 21%. Between 2009 and 2010, 1 million more children in this country went into poverty by our tax proposals and the way we govern this country. Children are paying for the things that are going on in this committee, and here we come today with a bill to put 1 million more kids at risk because we're going to take away the program we put in to prevent them from going into poverty, to help their parents, and now we're looking for any way possible. We say if they don't have a Social Security number, they must be illegal. That's the assumption behind this. That's the assumption that will be sold in the PR about it, is that we're cutting illegals off, and we have no proof of that. The IRS doesn't say we have proof of that. But we're going to cut off 1 million kids and put more kids in poverty for $860 million a year for the next 10 years. Now, we won't tax people who are getting it in large bundles in tax cuts under Bush. You want to hear Bush? I'll give you Bush. I can give you a whole lot of other things we've done to help the people on the top, and we're going to do some more tomorrow. But we'll put 1 million more kids at risk. And that's why this is a bad piece of legislation. There's nobody who can justify that we are getting the illegals that are out there. And you know, a funny thing about kids, when they're born, they don't know where they're being born. They're born into a family. They want to eat, right? And their parents live in this country and are paying taxes under an I-10. They don't have a Social Security number. They're paying under an I-10 for whatever reason. And we put that I-10 in there so that we could collect more taxes from more people. It would make possible further expansion of tax collection. That's what it was about. And yet we're going to hear today move to take it away from another million kids and say, well, tough luck, you were born into the wrong family, so you're going to go hungry. That simply is not the American way. That isn't the way it used to be, but we're getting tougher and tougher and tougher on people at the bottom. And it is not going to do us well in the future. I urge people to vote against this proposal because there's no reason to put another million kids at risk.
All right, Ms. Black is recognized.
Thank you, Mr. Chairman. And I'd like to look at this from just a little different perspective because over the last 16 months I've been here in Congress, I have done numerous town hall meetings, at least in every one of my counties once, sometimes twice, and now a third time. And as I talk to the people in my district who don't necessarily affiliate themselves with the Democrat Party or the Republican Party or independent, these are just people, hardworking taxpayers. And I sometimes will bring up issues just like this because I was there at the Oversight Committee hearing and heard about this, and I asked them, what do you think about this? Let me just give you the scenario. Of course, we're over $15 trillion in debt, so that money's got to come from somewhere because the government doesn't make a product or a service. It has to come from the people, the hardworking taxpayer that are right there at my town hall meetings. They're just average, everyday people. And they're frustrated and they're angry because they say, you know, government is spending too much of our money. What are you all doing up there? You are the overseers of the dollars. And when you find that there is a program that is not being properly administered and there is some kind of fraud, waste, and abuse somewhere, why don't you take care of it? And that's really what we're doing here is we have found by the Inspector General's testimony that these dollars are not being spent properly because the eligibility is not there. To be sure that we give the IRS the authority to be able to ask for the proper documentation when you get some kind of subsidy or you get a tax credit or whatever, there has got to be verification. And when the Inspector General comes before us and tells us, here is a problem, we've identified a problem, it is our role and our responsibility, and it is a bipartisan role and responsibility of this committee and every committee to make sure that we are working hard to make sure that our hard-working taxpayers, whether they're Democrat, Republican, or independent, we can assure them that we're doing the role and the responsibility we have, especially in this committee, to make sure the dollars are being spent properly. Now, Mr. Barthold, is there, tell me, if they have an I-10, can they not also get a Social Security number?
Well, this is one of the points that we promised that we will follow up on.
Okay.
But the general purpose, as I noted, of the I-10 is if one is not eligible to work but needs a tax ID for other purposes. That was why the I-10 was created. If one is eligible to work, one is generally eligible to get a Social Security number.
Thank you. Thank you. So getting a Social Security number is not difficult. As a matter of fact, I'm a nurse. We do it for babies in the hospital. When they're born, they can get a Social Security number. So you can get a Social Security number from the moment you come into this world. This is not a difficult thing to do. Applying for a Social Security number is not difficult. So we're not burdening somebody beyond what it is that they are able to do. Everybody has Social Security numbers. As a matter of fact, it's a standard here in our country.
Would the gentlewoman yield? Yeah, would the gentlewoman yield?
I'm going to use up a little more of my time, and if I have time left over after I make these points, I will yield to you. But here's the other issue that really bothers me, is when we just start talking about, well, what's $750 million a year? What's $700 billion over 10 years? You know, it's not a lot of money. You know what? Every penny that we look at should be spent wisely. We should be the overseers. And when I hear that just this amount of millions or this amount of billions is not a lot of money, it really, really bothers me. Every single dollar should be a lot of money to us because it's not our money. It's the hard-working taxpayer, and it is the middle income. It's the middle income people that when they see this kind of thing, that they shake their head and say, you know, I'm working really hard. I am only making $10, $12 an hour. Why is it that I'm making $10 or $12 an hour and you're not even verifying that someone is eligible for these credits and they're getting them? Yeah, it makes them angry, it makes them frustrated, and you know what? It makes me angry and it makes me frustrated when we sit here as the people who have the ability to be able to make the change and the difference and argue about it in some way as if, you know, this is not a bipartisan job that we all have to do, to make sure that people are eligible when they receive whatever they receive from the government, because it is the hard-working taxpayer that puts the money there, and we're already $15 trillion in debt, and we had better make sure that every penny we spend, whether it's $700 billion over 10 years or whether it's $700 trillion, I mean, we have got to make sure every dollar is spent properly. And I yield back the remainder of my time.
Thank you.
Oh,
Mr. Crowley is recognized.
Mr. Chairman, I'm sorry, thank you for yielding time. Mr. Bartold, is it possible that the children in the families that are applying for this tax credit are American citizens?
Yeah, Mr. Crowley, we noted that under present law, the child is supposed to have a valid tax ID, and as I reported to Mr. Levin, our statistical analysis of the 2010 data was that 92% of the qualifying children for the tax credit had a Social Security number. So to get a Social Security number, you're a citizen or you're authorized to work in the United States. So I would presume that most of those are Social Security, if they're valid Social Security numbers, that they are citizens.
So we're not talking about the person who is actually
you're not
filing.
talking about the child.
We're talking about the child.
And I was answering your question about the child. The proposal before you is the requirement related to the person filing the return.
I understood that. So it's not only possible, it's probable, and indeed, it is a fact that the overwhelming majority of the children who are affected by this provision, the beneficiaries, the child tax credit, the notion or idea, as I think has been laid out by my colleague from Washington, was to benefit poor children. That's not a question for you to answer, but you made some observations yourself. So in fact, it benefits American citizens, does it not?
To clarify again, an eligible child needs the ID. 92% of those IDs are Social Security numbers, implying that.
And therefore, the benefit of that, of this, what is called a benefit, the child tax credit benefit, it goes to the benefit of the child, correct? In theory.
It goes to the household. It goes to the taxpayer, but yes.
Well, I'm having a discussion, so the gentlelady didn't yield before one of my colleagues asked, so let me have my conversation, please. The purpose of the benefit is to help that family afford what the daily life of a child brings to a family. Is that correct? Would you agree?
Well, as I noted, the legislative history was that the committee wanted to reduce tax burdens on larger.
But I just want to be clear to my colleagues that, you know, maybe it's about other laws, that some people, innocent people may go to jail. Or let's take it this next step. Innocent people may be executed in states that allow for capital punishment, and that will happen. But the overall public safety notion is that we have to, you know, kill these bad guys. So innocent people will die. It happens. DNA now proves otherwise, but it does happen from time to time. It's kind of the same thing. In order to protect the public welfare, to make sure that every tax dollar is being spent accurately, we will hurt American citizens who otherwise who ought to be eligible for this because they do not have a Social Security number when they're filing for this benefit. That's my observation. I'm not asking you a question. I think that this is a terrible way to move forward. Why the child tax credit was chosen is interesting as well. I mean, there are other benefits. There is the adoption tax credit. There's the higher education tax credit as well. and this is not only a slippery slope, I can see where this is going, but in particular, on this day when we're talking about really defining the two sides here, what was pointed out before, one of my colleagues, about how they're being viewed as being against the working people and for raising taxes on poor people and standing with oil companies and standing with the rich. Well, you know, the proof's in the pudding. Once again, we have another bill here that would deny a tax credit not to millionaires. They don't need it, but to working people and poor people, quite frankly. And American citizens will be denied the benefit that they ought to have in order to live, in order to survive in this great country of ours. And I'll yield back the balance of my time.
Gentleman yields back. I would just say that this was not chosen. The Taxpayer Inspector General brought this issue to us, and I think largely because the welfare reform law addressed this issue with regard to the earned income tax credits refundability, and that's why we're looking at this.
Will the gentleman yield for a moment, just for a moment? What I'm suggesting is it's a slippery slope. I think there will be other issues coming before it that are meant to help the middle class and the poor amongst us that will also have this question risen.
I think we've had a lot of discussion on this. I'm prepared to move into the amendments. Are there any amendments to this legislation? If there are no amendments, I will now recognize Mr. Herger for the purpose of offering a motion.
Mr. Chairman, I move that the committee transmit the committee print related to Social Security number requirements for a refundable portion of the child tax credit to the Budget Committee pursuant to reconciliation instructions included in Section 201 of H-Con Resolution 112, the concurrent resolution on the budget.
The question is on transmitting the committee print to the House Committee on the Budget. All those in favor signify by saying aye. Aye. Those opposed signify by saying no. The ayes have it. The motion is agreed to.
Mr. Chairman, on that, I would ask for the ayes and the recorded votes.
The clerk will call the roll.
Mr. Herger? Aye. Mr. Herger, aye. Mr. Johnson? Aye. Mr. Johnson, aye. Mr. Brady? Aye. Mr. Brady, aye. Mr. Ryan? Aye. Mr. Ryan, aye. Mr. Nunez? Mr. Nunez, aye. Mr. Teaberry? Aye. Mr. Teaberry, aye. Mr. Davis? Mr. Reichert? Aye. Mr. Reichert, aye. Mr. Bustani? Aye. Mr. Bustani, aye. Mr. Roscom? Aye. Mr. Roscom, aye. Mr. Gerlach? Aye. Mr. Gerlach, aye. Mr. Price? Aye. Mr. Price, aye. Mr. Buchanan? Aye. Mr. Buchanan, aye. Mr. Smith?
Aye.
Mr. Smith, aye. Mr. Schock? Aye. Mr. Schock, aye. Ms. Jenkins? Aye. Ms. Jenkins, aye. Mr. Paulson? Aye. Mr. Paulson, aye. Mr. Marchant? Aye. Mr. Marchant, aye. Mr. Berg? Aye. Mr. Berg, aye. Ms. Black? Aye. Ms. Black, aye. Mr. Reed? Yes. Mr. Reed, yes. Mr. Levin?
No.
Mr. Levin, no. Mr. Rangel? Mr. Stark? No. Mr. Stark, no. Mr. McDermott? No. Mr. McDermott, no. Mr. Lewis? No. Mr. Lewis, no. Mr. Neal? No. Mr. Neal, no. Mr. Becerra? Mr. Doggett? Mr. Doggett, no. Mr. Thompson? No. Mr. Larson? No. Mr. Larson, no. Mr. Blumenauer? Mr. Kind? No. Mr. Kind, no. Mr. Pascrell? Mr. Pascrell, no. Ms. Berkeley? No. Ms. Berkeley, no. Mr. Crowley? No. Mr. Crowley, no. Mr. Davis? Aye. Mr. Davis, aye. Mr. Rangel?
You want to know how you...
Mr. Becerra? Mr. Thompson? No. Mr. Thompson, no. Mr. Blumenauer? Chairman Camp?
Aye.
Chairman Camp, aye.
The clerk will report the vote.
22 yeas, 12 nays.
There being 22 ayes and 12 noes, the motion is agreed to. The committee print related to Social Security number requirements for a refundable portion of the child tax credit is ordered transmitted to the House Committee on the Budget. Without objection, staff is authorized to make technical and conforming changes to the committee print. The committee will now proceed to consideration of the committee print on budget reconciliation legislative recommendations relating to repeal of block grants to states for social services, which was distributed in advance. Without objection, the committee print will be considered as read and open for amendment at any point. We will now thank Mr. Barthold for his efforts and turn to Matt Whitinger, Staff Director for the Subcommittee on Human Resources, to provide the technical description of this matter. And I would ask that members hold their questions until after his presentation. Mr. Whitinger.
Thank you, Mr. Chairman. The legislation, the reconciliation legislation for the committee repeals sections 2001 through 2007 of Title 20 of the Social Security Act, which now provides authorization for what is called the Social Services Block Grant, or SSBG for short. In response to Mr. Levin's question at the beginning of the markup, the change is effective on October 1st, 2012, so it begins with fiscal year 2013. The specific sections repealed currently provide for the following. Section 2001 describes the broad purposes of the SSBG. Section 2002 provides that states are entitled to allotments from the SSBG, including for various social services, as well as the cost of administration, personnel training, and conferences or workshops. Section 2003 states that the total amount of all allotments to states is currently $1.7 billion per year. Section 2004 requires states to provide a report on the intended use of these funds, which is to be revised as may be necessary to reflect changes in how the funds are actually used. Section 2005 specifies limitations on how the funds may be spent, such as generally not for the purchase or improvement of land, which is a restriction that actually can be waived, or for the provision of medical care with certain exceptions. Section 2006 provides for reports and audits by each state of how it actually spent its allotment, including specifically the number of individuals who received services, the amount spent by type of service, and whether services were provided by public or private agencies. Section 2007 is effectively an expired provision which once authorized HHS to award $1 billion in special grants in fiscal years 1994 and 1995. The repeal of the SSBG program was assumed in each of the last two House-passed budgets, and SSBG is often referred to in reports that highlight duplicative government services. For example, according to the 2009 HHS report on SSBG, states report spending SSBG funds on 29 different types of services. These include child care, which GAO has reported receives funding from 68 other programs administered by 9 different federal agencies, child welfare, which receives funding from 8 other programs just under the Ways and Means Committee's jurisdiction, education and training, which receives funding from 46 other programs across 9 federal agencies, and disability services, which receive funding from nearly 200 other programs across 20 agencies. The HHS report also notes that the most common service provided by the SSBG is information and referral to other social welfare programs. There's no required state match for the $1.7 billion in annual federal funding under the SSBG, and state shares of the federal funds are provided based on population. In terms of program accountability measures, states simply are required to report on the number of people receiving various services, their age, the amount spent on each service. No information is provided on the characteristics of the recipients of SSBG services. There are no federal eligibility criteria for receiving these services. Section B of the legislation includes various conforming amendments to other laws to make account for the fact that the SSBG would be repealed. Section C of the provision provides for the effective date. And finally, I would add that the legislation does not affect separate provisions elsewhere in Title 20 related to demonstration projects involving health professions and the Elder Justice Act. Mr. Chairman, that completes my walkthrough.
Thank you, Mr. Weininger. Are there any questions? Mr. Levin's recognized for 5 minutes.
We've been here for 3 hours, and maybe everybody's getting a bit weary, but I just want to be very blunt about this. you talk about duplicative services. That is a mask to eliminate a needy program for people in need. What's provided here is a series of needy services. It's so ironical you want to block grant Medicaid and you criticize a block grant for these social services. You can't cover what you're doing here. This is wholesale hurting of the needy while you hold harmless the very wealthy. I just want to ask you, from the data I have, I guess the most recent data is 2009, that 35 states used then $391 million for child care. 6 states spent more than 20% of their funds, SBG funds for child care. California, 52%, et cetera. Mr. Weidinger, do you have any later information?
No, sir. I believe that's the most recent information.
Is this accurate? Yes or no?
It is correct that states spend varying amounts for varying services.
No.
under the program.
Is it accurate that 6 states spend more than 20% of their SSBG funds for child care?
There's a report on that. I'll take your word on that. I don't have that report.
All right. It's also true, you mentioned several programs. Somehow you call them that they're duplicating TANF, CCDBG, and this program, but only 1 of every 6 children federally eligible for child assistance receive such aid. So now you're taking away one of the programs that provides child care. You want to call that duplication? It's a mask. The chairman and I worked together year after year to sustain this program, year after year. And now what's happened is you need some money for the next fiscal year, and you don't get it through the 2 other programs, so you grab this one. You grab this one. The same is true of of programs in other respects. Let me just ask you about adult protective services. According to the latest information we have, 10 states use 10% of these funds for adult protective services. Among them, New York, 37% of these monies, South Carolina, 23%, West Virginia, 18%, Texas, 16%, Oklahoma, 16%, Tennessee, 13%. You have any reason to challenge those figures?
No, Mr. Levin, that supports the point. The program spends varying amounts of money in varying states, depending on what the states choose to spend it on up to 29 different services, including adult protective services.
You're a staff person. You're not supposed to be advocating, but that's okay. It's okay. No.
I thought that was a factual.
Yeah, Mr. Chairman, I thought
Okay,
that was
it's okay.
But
It's okay.
you have the time.
You can say
Mr. Levin
you
has
can
the
say whatever you want. Look, I want to read from the National Conference of State Legislators this letter of April 16. Eliminating SSBG would shift the cost of these services to states. State legislators would not necessarily be able to backfill programs funded by SSBG due to 4 years of back-to-back reductions in their own state budgets. Between 2008 and 2013, it is estimated that states have closed a $527 billion budget gap. Moreover, state revenues remain at pre-recession levels. Essentially what this does is to take funds from programs for people in need from birth through older age.
All right, time has expired. Mr. Davis is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Weidinger, my understanding of SSBG is that the program began as a focus program in the 1950s dealing with a specific issue, but it's mutated quite a bit over the years. Can you tell us what the purpose of the program was when it first started, and was it targeted to a specific group of people? Did eligibility for the original program depend on income?
That's correct, Mr. Davis. In the 1950s, when the program was first created, it was designed to assist individuals with who were current welfare recipients and designed to reduce dependency. At that point, it was a 50-50 federal-state matching program that was used for a small set of services for that specific purpose, reducing dependency. Then in the 1960s, the legislative history seems to suggest that states were not eager to adopt 50-50 state funding, so the program changed to be 75% federally funded with a broader array of services for a broader array of individuals, including potential welfare recipients who were made eligible then. And then by the 1980s, the federal funding became 100%, and all eligibility requirements and basically the current broad array of services that are available, the up to 29 services, was made allowable under the program. So as time passed, the program shifted to be less focused, less targeted, and with less of a state partnership.
So you're saying it had declining accountability over the period of the program?
It's certainly hard to have accountability over a program that says that almost anyone is eligible for services.
Looking at the history of SSBG, are there other programs that have been created since it began to address the same issue or similar issues? And perhaps you could tell us some of those.
Mr. Davis, since the program was originally created, the predecessor to the SSBG was created in the 1950s. A total of over $400 billion in other federal, mostly individual entitlement programs have been created. Those include Medicaid, Head Start, SSI, EITC, foster care and adoption, promoting safe and stable families, child care block grant, SCHIP, refundable credit, mostly under this committee's jurisdiction. So those would continue to be available to provide services to individuals, even in the absence of the social services block grant, which again flows to states.
Okay, thank you. You know, one thing I'd like to point out as we've been having discussions on processes in government, that there, I think, has generally been a bipartisan focus on good government and accountability. While the current president's budget doesn't directly change SSBG, the logic of his stated desire to erase or to address duplicative programs and those whose effectiveness can't be established clearly apply to the SSBG and what we're discussing today. And just on page 23 of the president's budget, I'd like to just read into the record. It says, in addition, for far too long, many government programs have been allowed to continue or to grow even when their objectives are no longer clear and they lack rigorous assessment of whether the programs are achieving the desired goals. The result has been the profusion of programs that are duplicative, ineffective, or outdated at a significant cost to taxpayers. The Clinton administration in the 1990s actually made a case for cutting and succeeded in cutting. SSBG was one of these programs that it addressed, and I'd like to also quote from President Clinton's 1999 budget. In February of 1998, he said, "The budget targets funding to programs that can better demonstrate positive performance. The social services block grant supports a broad range of social service programs, but without statutory performance goals or measures of progress." And that the point that I would like to make is the without statutory performance goals or measures of progress. So I think that two Democratic presidents who are laudably speaking about the need for improvement of efficiency in government are addressing this. We have the question of duplicative programs here, and I think that makes the case for the types of process reforms that we've been talking about very consistently, moving away from ideological focuses of either party and really looking at the business process the way it would be looked at if this was our family budget or whether it was a business. And with that, I'll yield back, Mr. Chairman.
Well, thank you. Before I go to Mr. Doggett, I do want to acknowledge that former member of this committee, Representative Clay Shaw, and his wife Emily are here from Florida. It's great to see you both. Welcome to the committee room. Good to see you. Thank you. Mr. Doggett's recognized for 5 minutes.
Thank you, Mr. Chairman. It is obvious today who will pay for the insistence of our Republican colleagues that all that our country needs is more tax cuts for those at the top. And this bill in particular makes clear that those who will pay for that ideological program are seniors who rely on a hot meal from Meals on Wheels, abused children, children with disabilities whose parents are trying to help them overcome those disabilities, victims of child abuse, seniors and individuals with disabilities who want to live independently. Those are the people who will suffer as a result of this bill being adopted. And they are the same groups that Republicans in Texas have turned to pay for their approach to budgeting. In addition to cutting our public schools, we learned only within the past week that Easter seals, for example, in Central Texas being cut by over a fourth, significant cuts for Any Baby Can in Austin, Travis County Integral Care, and the same thing is true of programs in San Antonio and across Central and South Texas. As for the process reforms of which my colleague refers, and the idea that there are duplicative programs in this social service area, I think there is merit to process reform. I believe that some of our block grant programs are blockheaded, particularly the new block grant programs that Republicans want to use with Medicaid. Actually, some have suggested that Medicare be included also, and they've suggested that food stamps be block granted. I think when you give all of these funds to a blockheaded governor, sometimes you get bad results. But today, they also give us an indication that one of their goals in characterizing everything from Pell Grants to school lunches as welfare is to cut and reduce it. And by their action today, they demonstrate what could likely happen with other block grant programs in the future that in this case, they simply eliminate it with this proposal. It is also somewhat like their approach to the Affordable Health Care Act. They say they are for repeal and replace, but they're a little bigger on the repeal part than the replace part. They've never gotten around to offering any legislation on the replacement. If this were a bill to consolidate and improve the efficiency of the process of the delivery of services to seniors, to children, to the abused, to those who want to live in independent arrangements, I would be the first to embrace it. I think we can improve that delivery of services. But to simply go in and repeal this program at a time that is so critical to individuals across the country, and when groups like Easter Seals and Any Baby Can, who try to serve this population at the local level, are seeing significant cuts, it is not the inefficiency that goes first. It is the individual with disabilities who contacted us yesterday who relies on funds from this service, who is disabled and in a wheelchair and relies on these services to get urological supplies. It is the individual family that has a child with autism who is trying to keep that child at home. It is the senior, the one warm meal they get a day is through Meals on Wheels. Those are the individuals that will pay for the cut and the elimination of this program. And I think it is the wrong way to fund more tax cuts for those at the top. I would like to see comprehensive improvements in this area, but not at the cost of those who are most vulnerable in our society. Repealing this block grant program, which was signed into law by Ronald Reagan and which has enjoyed bipartisan support through the years, is a giant step backward. It is not being replaced with anything. It is simply denying services to those who can least afford to lose those services. And so many of the services that come out of this program are focused on independent living, on not having to confine and warehouse individuals with disabilities, children with disabilities, and seniors who are better off staying with their families if those families can get some supports. It is a terrible price to pay for this ideological commitment to more tax cuts for those at the top. I urge the committee to reject it and preserve the social services block grant until a better and more efficient way of delivering services can be established on a bipartisan basis. And I yield back.
Thank you. Mr. Nunes is recognized.
Thank you, Mr. Chairman. The press is gone, but luckily we're still broadcasting live on C-SPAN out there for everyone to see. And I yield my time to Mr. Davis.
I thank the gentleman. I'd like to point out to my friend and colleague from Texas, the ranking member of the Human Resources Subcommittee, that we've worked together over the course of this Congress with an admirable record of improvement to processes and government programs by stepping out of some of the emotional perceptions to be good stewards of the taxpayers and address legitimately the needs of the constituents that would be recipients of the programs that were discussed by Mr. Weidinger earlier that are already addressed by SSBG. I'd like to characterize that we're not opposed to any of the services that SSBG funds, and certainly are not opposed to the people in need of receiving assistance. However, this program does not serve taxpayers well because it's not focused. It duplicates existing programs, and states no longer have any skin in the game at all to provide localized accountability as one would expect. I'd like to further follow the ranking member's point earlier when he said that we call it duplicative. And coming to Mr. Weidinger's defense as his chairman in the subcommittee, as he's answering the questions about whether it's called duplicative or not, I'd like to clarify that we're not the ones that set that. GAO, the Government Accountability Office, has called it a duplicative program. And Mr. Chairman, I would like to enter into the record the GAO report that calls SSBG a duplicative program.
Without objection.
And with that, Mr. Chairman, I yield back to the gentleman from California.
Gentleman yields back. I think on my list I have Mr. Thompson next.
Thank you, Mr. Chairman. Boy, today's not a good day to be poor. This is just an attack on those in our communities that need help the most. And right across the hall or upstairs, they took out after the food stamp program today. And now today we're going after in this committee and this bill the most vulnerable of those who live in our neighborhoods and our communities. And it's just a sad, sad time. And what's most troubling to me, or equally as troubling to me, is some of this block grant money goes to provide help for folks so they can go to work. So this is going to have a double effect. If you can't get child care, you're not going to leave your kids home alone. If you do, that's just going to create a whole bunch of other societal problems. You're not going to leave them with the wrong people. This is appalling. We have gone to great lengths to assist people to get into the workforce, and today, with one vote, we're going to reverse all of that work. One of my counties, Sonoma County, wrote to me about this particular provision. And I just want to point out,
oh, did he?
They say that the funds that the majority party wants to cut today are fund our clients most in need, including elder adults, people with disabilities, and those served by the child welfare services, foster care, and child care programs. They go on to say that it is currently the only source of federal help for adult protective services, a program which provides assistance to elder and dependent adults while protecting them from abuse, neglect, and exploitation. Protecting them from abuse, neglect, and exploitation. And we're going to cut this today. We're going to cut it, and then tomorrow we're going to give $46 billion in borrowed money to some of the people in this country that least need any assistance. And it just seems terrible that we would even think about doing that. I yield the remaining part of my time to Mr. Doggett.
And I would just use it to respond to my chairman, Mr. Davis. We have worked together and achieved some bipartisan success in this area. And we could achieve bipartisan success here. If the problem is that the states don't have a match in this and need to have a match, let's require them to do that. If the problem is that there aren't sufficient standards on this, let's do that. But the real problem today is you folks need money to finance more tax cuts for those at the top. And the people you're turning to are the very people that Mr. Thompson just referred to. Victims of domestic violence, victims of child abuse, individuals with disabilities and seniors who want to live independently and not be warehoused. Elder abuse. All of these are the kind of programs. It is those people who are going to pay for these tax cuts at the top. The Director of Job and Family Services in Ohio County has written us expressing concern that this block grant is the source of funding for the child and protective services and adult protective services that they have, and that those services will be significantly reduced and deaths will occur if this program is cut. I'd like them to get more out of the program, a more efficient program. I'd like to have more efficiency for the individuals from North Carolina who say that this is the largest source of adult protective services. From another county in the state of Ohio that writes about the effect that this will have on victims of domestic violence and the homeless from cutting this program out. It would be great to say to them, well, go take that up with Governor Kasich. But we know that that would be about as successful as saying, go take it up with Governor Perry. This is the program that these local entities and groups like Easter Seals, Any Baby Can, those who are fighting domestic violence, rely on to provide those services. They cannot provide those services without at least a little federal support. I'd make the federal support better and more efficient and less duplicative, but it is not a solution to terminate it, not because you think it's inefficient, but because you need dollars for more tax breaks for those at the top, and that's what's involved today. I yield back.
Thank you for yielding back. I will just say to the gentleman, we're here because the Budget Control Act has required that we reduce the debt. We have $15 trillion debt, and the Budget Control Act has said in 2013 we need to find deficit savings. We need to somehow find savings. So that's why we're here doing this today.
Will the gentleman yield?
And I'm going to go to Mr. Crowley. I think it's his time. But before I do that, I would like Mr. Whitinger to, you read him pretty quickly at the beginning, to go through the various programs and the various committees of jurisdiction again, and a little more slowly. I couldn't get them all down as you said them the first time. If you could just repeat that for the committee. The amount of duplication.
Mr. Chairman, the point I was making was since the Social Services Block Grant, actually the predecessor to it, was created in the 1950s, Congress has acted and the various presidents have signed a number of both discretionary and, more importantly, entitlement programs that support social services in various ways. Most of those provide direct services to individuals. So individuals, for example, when members discuss whether child care funding would remain available under this, well, there are separate entitlement and also discretionary programs, as well as tax programs that support child care outside of the Social Services Block Grant. From the $1.7 billion that's provided for child care, or for the Social Services Block Grant each year, only about $100 million is actually spent on child care. Separately, there's a $5 billion child care program that is under the committee's jurisdiction. In terms of other types of similar programs, Medicaid provides, obviously, health services. Head Start provides similar child care like services that are under the jurisdiction of the Education and Labor Committee. Extended benefits were created under the Ways and Means Committee's jurisdiction.
I thought you said 68 child care programs in your testimony.
That's correct. My statement referred to broadly how GAO has presented reports dating back many years that suggest that there are 68 separate child care programs under 9 different federal agencies. In terms of child welfare, the Ways and Means Committee has 8 other programs under its jurisdiction that support child welfare activities, from foster care to adoption to child protective services. Education and training. GAO has released reports that suggest that this is one of a total of 47 programs that support various education and training across 9 different federal agencies. And when it comes to assistance for the disabled, GAO has reported that there are nearly 200 separate programs across 20 federal agencies that support disability services of one sort or another.
And given that we're required to do this under the Budget Control Act, and the testimony we had before the Simpson-Bowles Commission from Professor Reinhard was that because our debt is as large as our economy, it's shaving off the ability of our economy to grow by about 1%, which means about 1 million jobs in the U.S. And that's why we've got to find ways when there are when there are dozens and dozens of programs that address the same issue, and we have one that has really no accountability according to the General Accounting Office and is duplicative, it seems to me this is the area we ought to look. With that, Mr. Crowley's recognized for 5 minutes.
Thank you, Mr. Chairman. I'm a little surprised to see this measure included in today's markup to eliminate the Social Security block grant. I'm surprised in part because I believe my colleagues on the other side of the aisle have frequently supported this program and the services that they provide. But I'm also surprised because so much of the rhetoric around the Republican budget makes it sound like this would be exactly the kind of program they'd like to create more of. We keep hearing from the other side of the aisle about the need to, quote, have flexibility, how they want to give states the authority to direct funds to what's needed in the individual state. Well, I'll tell you what, that's exactly what the Social Security block grant does. It lets states fill the gaps as they see it, so that they have the flexibility to really meet the needs of vulnerable populations, such as frail seniors that my friend from California pointed out. At-risk children. Now, at-risk it's really a euphemism. It's children who have parents addicted to drugs. It is children who have known abuse, children who have been abused, the outcast, children who have no other resource. That's what we talk when we say at-risk children. And lastly, it affects working families. In my state of New York, a major use of the Social Services Block Grant is to support services for seniors so they can continue to live in their home free from the fear of abuse, neglect, or exploitation. If these seniors couldn't count on getting care at home, they would have to move into a nursing home or some other setting, costing themselves and their families money that they don't have. Without these services, working adults would have to devote time and money to making sure their older parents are getting quality care, costing them time away from work where they can earn the money they need to help pay those bills. New York State has decided this is an important use of these funds, and while my colleagues like to talk about so-called duplication of federal programs, the Social Services Block Grant is really the only program supporting core protective services for seniors. We should be applauding this program that gives states the ability to help people access services like child care, hot meals, and preventive services for at-risk youth. But now my colleagues on the other side of the aisle want to eliminate this program, even though it sounds so much like their plan for other federal programs. We don't hear a lot of new ideas from the other side of the aisle, but we do hear a lot about how block granting is supposedly the answer to all our problems. I have to wonder if the Republicans succeed in their efforts to block grant programs like Medicaid and food stamps, will we be back here in a few years watching them try to eliminate those block grants as well? Are block grants and state flexibility just buzzwords and a step on the road to eliminating the safety net for those who really need them? If step one is block granting and step two is eliminating altogether, I guess step three will be throwing our hands up and wondering why states are having so much trouble providing necessary social services to their people. My colleagues on the other side of the aisle may think this vote won't be noticed, but the simple fact is that without social services block grants, senior centers' doors will close, adoption caseworkers will be let go, and protective services for children and mentally ill will be eliminated. And when my constituents start asking me why services are no longer available, this bill will be example number one as to why that's the case. Let's not go there. Our country is better than this, our nation is stronger than this, and our hearts are much bigger than this. We don't need to slash and burn the safety net for our nation's most vulnerable, instead of asking the rich to pay a bit more. What we do need is to continue the bipartisan record of supporting the Social Services Block Grant and oppose this bill. And Mr. Chairman, I yield the remainder of my time to Mr. Doggett from Texas, who was looking for time before.
Well, I believe you've summed it up well, Mr. Crowley. This is something that will affect individuals in all 50 states. I think that it is one of the reasons that so many groups from around the country that are impacted have been contacting the committee members and expressing their concern. One of those that we've not discussed earlier today is the National Foster Care Coalition. I don't believe that foster families are overburdened with too much in the way of resources. And there are some 29 different services that are available as a result of the Social Service Block Grant that are available to be of assistance with this whole issue of foster care. 41 states have relied on the Social Services Block Grant to protect children from abuse and neglect. There are literally millions of children who have benefited from this program. I would like to see it made better. I know the gentleman from New York would be eager to work. He serves on the Human Resources Subcommittee with the committee staff to make it better, but not to eliminate it to the children that need it the most, who are victims of abuse and are now being abused by the elimination of this program.
Ms. Jenkins is recognized.
Thank you, Mr. Chairman. This administration claims to have continually focused on making sure federal programs work. And in fact, I found a quote from President Obama from his inaugural address saying, "The question we ask today is not whether our government is too big or too small, but whether it works. Where the answer is yes, we intend to move forward. Where the answer is no, programs will end." And I think this is the question before us today: is this program working? And so, Mr. Whitinger, how has this program performed? Based on the data available, what do we know has been effective about it?
Thank you, Ms. Jenkins. In short, the effectiveness of the program is unknown, because what we know are the numbers that the members have been describing. We know that there are X million individuals who have received some sort of child care service. We know there are Y million people who have received some sort of child welfare service. But then when you take a step back and think about the numbers that are involved in this program, it provides $1.7 billion per year in assistance. Mr. Levin described 23 million people receiving that assistance. That breaks down to $75 per person. What that suggests is the per person support from this program is not a whole lot. And then you take another step back from that and you ask, why is that? Because one of the primary purposes for this program is to support some state administrative costs that are actually involved in referring individuals to other programs. So the HHS report that I cited before on the Social Services Block Grant actually says the number one purpose and the largest single group of people who receive services supported by this money are actually those who are given informational and referral services involving suggesting there are other programs which they might benefit from. So in short, the effectiveness is unknown, including because the program does not ask the sorts of questions and does not expect the sort of answers that would tell us if the program is effective.
Okay, so there's basically no measure of outcomes, and has the administration continued to propose funding for it despite this lack of evidence of success?
The President's current budget maintains the block grant at $1.7 billion per year.
Okay. You mentioned in your summary of the legislation that the program has no state spending requirement, no requirement that states match the federal money they receive. My understanding is that these are pretty common features of most Social Security programs. Are there features common in other programs, and should we consider SSBG to be a block grant or just federal tax revenue sent to states with no strings attached?
I believe Chairman Shaw, back when he was chairman of the Human Resources Subcommittee, referred to a program like this as putting money in a satchel and leaving it on a stump in the middle of the woods. That's more colorful language than others might choose, but it is a program that provides 100% federal funding to states without a match. Most of the other means-tested programs within the Human Resources Subcommittee's jurisdiction are matching programs of some sort, whether it be the TANF program, which has a maintenance of effort requirement, or the child care program, or even the SSI program, which is similarly general revenue funded, but has a significant state component in terms of state supplemental payments. So SSBG is unique among the packet of programs in our jurisdiction in not having a state match.
Didn't even the Democrat stimulus law require matched spending?
That's correct. The 2009 stimulus law created something called the Welfare Emergency Fund that required, if I remember properly, a 20% state match in order for states to receive up to $5 billion in additional TANF funds.
Okay, thank you. I yield back.
Thank you. Mr. Stark is recognized.
Thank you, Mr. Chairman. I'd like to address the impact that eliminating SSBG will have on children. I'd also address the adult protective services, but I think I have a conflict there, so I'll leave that alone. I've worked across the aisle on welfare issues with most members of this committee, and I think we all have agreed that one of our primary responsibilities would be to avoid actions that would lead to more children being abused, more children forced into foster care. As a matter of fact, our good chairman has sent on 4 separate occasions letters to the Appropriations Committee asking for increases to SSBG in order to help vulnerable families. We know that about 6.5 million kids will lose some kind of services. Daycare, so their parents are able to work and improve our economy. Reducing stays in foster care, counseling to children in and out of home placements to facilitate adoptions or guardianships. I think we'll see, if we reduce child protective services, family reunification, and adoption assistance, we'll see an increase in child maltreatment. So there's no protection that would negate the cuts to SSBG if there is an increase in child abuse or out-of-the-home placements. I think this is not the time to eliminate a program. I share the concerns of my colleague from Texas, Mr. Doggett. There's a lot we could do to improve it or rework it. I'd like to work across the aisle with my friends to do that. But in the meantime, I think the wrong thing to do is to eliminate the program. That just puts us back many, many years and is not helpful either for people who want to go to work, to the economy, or most importantly, to the vulnerable children in our country. I yield what time I may have to the ranking member, Mr. Levin.
It's so ironical this is coming up today. I just want to read from a letter of 2003 quickly. Dear colleagues, since its creation in 1981, SSBG has been a key source of flexible funding for critical social services. Nearly 14 million children and adults receive SSBG funding services every year. SSBG funding paid for over 20% of state efforts to promote family self-sufficiency. More than a fourth of funding for services to the elderly like Meals on Wheels, elderly abuse prevention and in-home services, and 16% of child welfare services in 39 states. SSBG was a key source of funding for child care, non-Medicaid health services, and aid to the disabled. Then it goes on to say how the amount was reduced as a matter of welfare reform with a commitment to increase it. And then it goes on to say, unfortunately, the funding level was instead reduced to $1.7 billion in 1998, and the restoration canceled as a last-minute offset for unrelated legislation. That letter came from Nancy Johnson, Dave Camp, myself, Ben Cardin, Bob Mitsui, and Emil Houghton. Now there's a 180-degree turn by some. This, I'm afraid, is a very, very unfortunate mark on what was once a bipartisan effort. Thank you for yielding.
Let me just say to Mr. Levin, that letter was almost a decade ago, and our debt and deficit have changed dramatically in that 10-year period, including, as I said, my service on the President's Commission on Fiscal Responsibility, where the debt level in relation to our economy is impacting the ability of the economy to grow and create jobs. So yes, things have changed.
And you're going to add $46 billion to the deficit tomorrow.
Because we want to try to grow this economy and get people back to work.
Yeah, grow, but you're going to
sacrifice
these programs
let me
for
just finish, and you've had a lot of time, but let me just say that the other thing that has happened is these other programs that are cited in the GAO report have grown dramatically over that 10-year period as well, so that not only has our deficit gotten worse, but the child care, welfare, and other components to this block grant have been provided for in other programs. That's why we have now gotten a GAO report that says this is duplicative. We're doing this in other places. But we're going to be voting now. I understand that we have an amendment, and I know I have 4 people still wanting to speak. I'd like to see if we could, we've had quite a bit of discussion, if we can move this along and go to the amendment and vote, and then go to the series of votes and not return. So I have Mr. Bustani, Mr. Blumenauer, Mr. Pascrell, and Mr. McDermott. If we could move quickly, then we could have the vote on the amendment and then move ahead. Dr. Bustani.
Thank you, Mr. Chairman. I'll be very brief. In the ranking member's opening statement, he referred to ending Meals on Wheels, and that ending funding for SSBG would somehow end the funding for that program. Now, I understand some states spend a small portion of these funds, approximately $25, $26 million on home-delivered meals. Is this the Meals on Wheels program that is referenced?
Some part of SSBG is spent on what are typically called Meals on Wheels. It's about $25 million. It's heavily concentrated in Texas, as Mr. Doggett noted. But separately, the Older Americans Act, which is a program under the Education and Workforce Committee's jurisdiction, provides more than $200 million for Meals on Wheels services every year. That amount has been growing in recent years.
So cutting this program would not cut the Meals on Wheels program?
Correct.
Thank you. I yield back.
Mr. Blumenauer.
Thank you, Mr. Chairman. I will just try and do this in 1 minute. But I think this is part of, we're a little schizophrenic here. It was designed as a block grant without strings to be able to help states deal with a multiplicity of these. In my state, this is being able to deal with child care opportunities for low-income people so that they can actually work. It's Meals on Wheels in Texas. That's what it was designed to do, to be able to deal with local priorities and reinforce them and supplement resources. And to somehow cite the fact that states are using it as it was designed to supplement it, I think is a little bit of a catch-22. This is what they were supposed to do. This is one of the traps of block granting, which some people want to do, is it's a one-way ticket. This is to encourage states, it's to foster innovation, it's to meet local priorities, and then we turn around when they do exactly what was requested and then take it back. I think that's unfortunate. It's wrong in this case, I think, but it indicates the weakness in the approach that some people have as block grants as a panacea. Thank you, and I yield back.
Thank you. Mr. Pascrell.
Mr. Chairman, I take issue with your analysis of the cuts that we're talking about today, and you referred to the Simpson-Bowles recommendations. You didn't refer to the consequences, because we're seeing those consequences in states and municipalities already throughout the United States of America. The National Conference of State Legislatures sent a bipartisan letter opposing eliminating social services block grant, which is included in this bill. And here, let me quote from them. Eliminating SSBG would shift the cost of these services to the states. State legislators would not necessarily be able to backfill programs funded by the SSBG due to 4 years of back-to-back reductions in their own state budgets. Between 2008 and 2013, it is estimated that states have closed a $527 billion budget gap. Though that is the consequence. And a perfect example is in the area of disabilities. You examine all the 50 states, you see how they've been pressured to make those cuts. Let's look at the consequences of what we're doing and what we're suggesting here. And don't tell me that's not going to increase taxes in those states or eliminate the service.
All right.
Thank you, Mr. Chairman.
Thank you. We just have a few minutes left. Mr. McDermott. I think
It's a classic Republican bait and switch. I was in the state legislature in 1979 and 1980. I was the Ways and Means Chairman when all this happened up here in Washington, D.C. We had all these programs, and they were a capped entitlement. Along came Ronald Reagan and said, hey, let's block grant this, and we'll let the states have they can do whatever they want with this money. And we won't even put a requirement on them. We'll cut the amount of money, but we won't put a requirement on the states, and they can backfill with state money. Now, all of us knew in the legislature what this was block and chop. And now we're getting the final chop here. That's exactly what will happen when you block grant Medicaid. You will say to the states, here's your money, you can do whatever you want. And everybody sitting here who's been in a state legislature knows that they've just been through a state legislative session where they have cut the living daylights out of social service programs. So now we're cutting more. And the reason I speak and take my time is 54% of this grant is used in the state of Washington for foster care services. You are cutting 54% of the money for foster care services in the state of Washington by doing this. Most of you don't know what you're doing to your state governments. You have no idea how that money's used down there. And you say, well, we had to save money, there was no criteria. We set it up that way in the Congress. Mr. Blumenauer is absolutely right. Governors were handed this money and said, do what you think is appropriate. And they did that. And now we sit up here and get pious and all righteous and say, well, there's no performance criteria. Well, the governors have performance criteria. They have to deal with what's going on in their states. And their abused children and kids who die in protective services. And you're saying we want to cut those protective services. We want to cut the social services for children. You're doing it again, exactly as you did it in the previous bill, where you're pushing kids into poverty. All because you want to protect the wealthy in this country. It is a classic con game of the Republicans of bait and switch. Give them something and it looks like something, then take it away and give them something else or give them nothing. And that's basically what you're getting here. I urge a no vote on this bill.
Since there are no further questions, I know that Mr. Levin has an amendment. Mr.
I
Levin,
do.
recognized.
I know we want to go and vote.
Mr. Chairman, I reserve a point of order.
Right.
Point of order is reserved.
This would replace the funding in the bill with the Buffett rule. Look, you may chat. Let me just say this. Look, you said bait and switch, I think, Mr. McDermott. What this is slash and burn. So let's vote on this slashing and burning of the social service block grant. It is so ironical. You say it's unaccountable for. It goes to the governors, and you want more block granting, and now you slash this because it's a block grant. You have to find some dough to protect the wealthy. Let's just vote on the social service block.
Mr. Chairman.
Mr. Brady.
I made a point of order to the amendment because it's not germane to the matter before us. The amendment violates House Rule 16, Clause 7, which requires amendments to be on the same subject matter as the matter under consideration. We're currently considering a proposal related to the repeal of block grants to states for social services, and the amendment offered is not related to it.
Mr. Chairman.
Mr. Neal's recognized if you want to speak on the point of order.
I hope that we'll have an opportunity during the course of the next few months to discuss the amendment that Mr. Levin has offered. I think this is worthwhile and useful, and it's part of the responsibility we have as a committee to discuss marginal rates. It's an elementary responsibility that we hold on the committee.
Thank you. I'm prepared to rule. The gentleman raises a valid point of order. As the amendment deals with a subject matter different from that under consideration, it is not germane to the matter before us, which deals with social services block grants. The point of order is sustained, and the amendment is not in order. If there are no further amendments, I will now recognize Mr. Herger for the purpose of offering a motion.
Mr. Chairman, I move that the committee transmit the committee print related to repeal of block grants to states for social services to the Budget Committee pursuant to the reconciliation instructions included in Section 201 of H-Con Resolution 112, the concurrent resolution on the budget.
The question is on transmitting the committee print to the House Committee on the Budget. All those in favor signify by saying aye. Aye. Those opposed signify
Recorded
by saying
vote.
no.
Recorded vote.
The ayes have it. The motion is agreed to. The clerk will call the roll.
Mr. Herger? Aye. Mr. Herger, aye. Mr. Johnson? Aye. Mr. Johnson, aye. Mr. Brady? Aye. Mr. Brady, aye. Mr. Ryan? Mr. Nunez? Mr. Nunez, aye. Mr. Teaberry? Mr. Teaberry, aye. Mr. Davis? Aye. Mr. Davis, aye. Mr. Reichert? Mr. Reichert, aye. Mr. Bustani? Mr. Bustani, aye. Mr. Roscom? Mr. Roscom, aye. Mr. Gerlach? Aye. Mr. Gerlach, aye. Mr. Price? Mr. Price, aye. Mr. Buchanan? Mr. Buchanan, aye. Mr. Smith? Mr. Smith, aye. Mr. Schock? Ms. Jenkins? Ms. Jenkins, aye. Mr. Paulson? Mr. Paulson, aye. Mr. Marchant? Mr. Marchant, aye. Mr. Berg? Mr. Berg, aye. Ms. Black? Ms. Black, aye. Mr. Reed? Mr. Reed, aye. Mr. Levin?
No.
Mr. Levin, no. Mr. Rangel? Mr. Stark? Mr. Stark, no. Mr. McDermott? No. Mr. McDermott, no. Mr. Lewis? No. Mr. Lewis, no. Mr. Neal? No. Mr. Neal, no. Mr. Becerra? No. Mr. Becerra, no. Mr. Doggett? No. Mr. Doggett, no. Mr. Thompson? No. Mr. Thompson, no. Mr. Larson? Mr. Larson, no. Mr. Blumenauer? Mr. Blumenauer, no. Mr. Kind? No. Mr. Kind, no. Mr. Pascrell? No. Mr. Pascrell, no. Ms. Berkeley? No. Ms. Berkeley, no. Mr. Crowley? No. Mr. Crowley, no. Mr. Ryan? Aye. Mr. Ryan, aye. Mr. Schock? Aye. Mr. Schock, aye. Mr. Rangel? Chairman Camp?
Aye.
Chairman Camp, aye.
The clerk will report the vote.
22 yeas, 14 nays.
There being 22 ayes and 14 noes, the motion is agreed to. The committee print related to repeal of block grants to states for social services is ordered transmitted to the House Committee on the Budget. Without objection, staff is authorized to make technical and conforming changes to the committee print. Mr. Becerra.
Mr. Chairman, thank you. I believe I was not recorded on the vote on the child tax credit vote. If I had been present, I would have voted no, and I hope I could be recorded as such.
The record will reflect that. Thank you. There being no further business before the committee stands adjourned.